Good morning and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. Before I start the class, let me wish all those students who have greeted me on the query pad, my usual group of Hitesh Jain, Mahadev Bharadwaj, we have Pooja PS, thank you madam, and Ayush Agarwal, Sushil Kumari, and others who are there listening on. So, yesterday we began the Indian Contract Act 1872. We started discussing the special contracts. So, yesterday we completed indemnity and also we sort of got into guarantee. Now, very important topic in guarantee, the topic that we started discussing yesterday around the end of this session, nearing the end of this session, was discharge of surety. I cannot overstress the importance of this topic from the exam point of view. So we have Bandreddy joining us. Welcome. The other Pooja is here. Sai Kumar, Aita. Welcome all of you. And any queries are there, please do raise it. Today, the topic is pretty long and we need to really go fast. But I won't go very fast. But I would expect you not to ask me irrelevant questions out of the topic. Any specific questions on the topic. Similarly, I cannot repeat anything. So please concentrate. Do not 2.5 hours be here. If you go out for coffee and then come back and then ask me to repeat, it's not going to happen today of all days. This topic is very, because we have to also do bailment and pledge. We'll see how far we can go into that topic. So discharge of the surety. I'm just going through it quickly. We already discussed this yesterday. Very important point, and this could again be in the question in the examination. Okay. A specific guarantee cannot be revoked by the surety once the performance has been done. See, once the principal creditor has done something on that based on the guarantee is fixed. Right? So, a specific guarantee cannot be revoked unless, nothing has happened. For example, A wants to borrow 1 lakh from B. B says C should be the guarantor, right? As of at that point in time, nothing has happened. C says, okay, I'll guarantee. B has not lent money to A. Okay, till the money is given to principal debtor, Mr. A, the guarantee can be revoked. But the minute B gives 1 lakh to A as a loan, that's it. The guarantee is on till there's only way this can close is A returns the money back to B or performs the promise. Till such time, the guarantee is on. That is why guarantee is very dangerous. Once you give a guarantee, it's on. You cannot at any stage in the proceeding go and say, sorry, I'm no longer responsible. No. So once the principal debtor has received the liability or become liable, then specific guarantee cannot be revoked. Please understand the exception. It's not an exception. It's a common sense. The loan itself has not been given. Before that, you can withdraw the guarantee. But once the loan is given or once the principal creditor does something on the basis of the promise made by the surety to protect him, then no way it can be revoked. A continuing guarantee can be revoked only with respect to future transactions which have not occurred. Okay. Again, you have to give notice to the creditor. Simply sitting at home, you cannot decide. You have to give notice to the creditor. Again, ideally, put it somewhere in your mind. Oral is not good. Written is good, better. So don't waste your time on this oral. Don't have oral contract. Don't have oral communication. Except for family, friends and relationships where, interpersonal relationship where you want to motivate people, oral works. But if it's going to be legal, it's going to be contractual, please put it in writing. Okay? That's it. Otherwise, evidence is a big complicated thing. Leading evidence on oral contracts is very complicated. And you and I am not a lawyer. You are not going to become a lawyer. So don't bother about oral evidence. If as a chartered accountant, remember written. put everything in writing, email, confirm, okay, whatever. Let this be the learning from this, rather than unnecessarily asking what will happen if it is an oral contract. Nothing will happen. Proving it is going to be very difficult. And the court will finally, the judge will decide. You are at the mercy of the judge. Okay. Revocation of continuing guarantee by surety's death. Again, any already existing transactions will be on. Suppose a guarantee was given by A for the repayment of a loan. The loan was given to the person, the other person, guarantee is on. Nothing can be done. Suppose A dies, the estate of A will be liable. Whatever assets A has got at the time of death, first they will be used to pay his liabilities. One of the liability is the surety, guarantee. That will be paid. Whatever remaining only will go to the legal heirs. Okay. But suppose continuing guarantee is there, future transactions, no liability at the death of surety. Same. 130 and 131 are same theme, slight variation. Novation. The surety enters into a fresh contract. Okay. With the principal the principal creditor enters into a fresh contract with the principal debtor. That's it. The old contract is automatically discharged. This is not part of this chapter. It goes to original contract act 62, principle of novation. Means the guarantee itself can be revoked, renewed. New guarantee can be there. Many times you may go for a renewal of a guarantee, in which case the old guarantee is discharged and the new guarantee comes into place. Now this is very important. Students have a doubt here. Variance in the terms of contract between the principal debtor and creditor without surety's consent. There is a variance in the terms. It could be anything. Okay. For example, credit terms were 60 days. Our man makes it 90 days. Sorry, discharged. Variance in the terms. So A promises to protect. Okay, let's always have A principal debtor, B principal debtor, B principal creditor, C surety. Principal debtor is asking the principal creditor to supply goods, right? 60 days credit. Guarantor, surety says, okay, 60 days credit, whatever you supply, if he does not pay, I will pay. No problem. But suppose between them, they get into an understanding by which that credit is now 90 days without surety's consent, then automatically it will discharge the surety. Variation, if it is not very substantial, I have already given you examples for this yesterday in the last class, so don't worry. Beneficial to the surety, be very, very careful. It may be beneficial to the principal debtor, but it should be beneficial to the surety. For example, there should be some relaxation in the surety's liability. Then variation is okay. But that is very, very rare. Okay. Any variation would be only benefiting the principal debtor, not the surety. There should be surety, benefit to the surety. Only then it will not discharge. Okay. There is an exception. So we already seen this, so I'm not going to waste your time on this. Okay. Release or discharge of principal debtor. Here there is no need for consent of surety at all. The minute the principal creditor does something by which the principal debtor is discharged, it could be entering into a fresh or new contract with the principal debtor. Difference between novation and this. In novation, a new contract of guarantee is entered into between the three parties. A new contract of guarantee. So the old contract is discharged. Here, there is a discharge only of the principal debtor. The surety's liability continues. The principal creditor and principal debtor enter into a new contract by which the principal debtor is released. Now, this will automatically discharge the surety. If the principal creditor does any act or omission, the legal consequence of which is the discharge of the principal debtor. It's very important because later on you will be seeing the principle of subrogation. Once the surety discharges his obligation, he steps into the shoes of the principal creditor. So whatever rights the principal creditor had, the surety will have. Therefore, the principal creditor should protect the interest of the surety. The principal creditor should not do anything which will affect the rights of the surety. It could be an act or omission. It could be something he is doing or not doing also. One simple example is filing a suit before the period of limitation. That is all. Within the period of limitation, he may delay, no problem, in filing the suit. But before the 3 years period of limitation is getting over, the suit should be filed. If the principal creditor makes it time barred, then gone. Because it's an act of omission, the legal consequence of which is the discharge of the principal debtor. See, after all, nobody can sue the principal debtor, neither the creditor nor the surety. Now the principal creditor cannot go to the surety and say, you give my money. Why should I? Because you should have filed a suit, you did not. Suppose you had filed a suit, I could have taken over that suit. It is perfectly possible. I could have become a party to the suit and continued the suit against the principal debtor. But by not filing the suit, you have affected my rights. The illustration is an example of discharge. See, A has given a guarantee to C for supplying goods to B. C supplies the goods. Later on, it looks like B may not pay all his debts. So he calls all his creditors, including C, and tells them, take my property and leave me. So the creditors, including C, take the property and release him. Now, once the principal debtor is released, then the surety's liability is discharged. Okay? Question was asked rightly yesterday whether the consent of the surety is needed. Here there is not necessary. Okay? Any discharge, gone. Discharge of surety when creditor compounds with, gives time or agrees not to sue principal debtor. See, this is again an extension of 134. I am doing something which will prejudice the right of the surety by giving time, or I am saying I will not sue you, boss, like that. Who are you to say? Because you have to file a suit. Very, very important. The suit you can forbear. How it will happen? The amount is due. I go to him. I am the principal creditor. I go to the debtor. I ask him, hey, pay my money, man. The guy says, hey, give me time here. Another 2 months I'll pay you. Chalo, no problem. Take 2 months. That's okay. But suppose, I keep on doing. But the minute you do all these things without the consent of the surety, then you are in trouble. Better not do it. Otherwise, see. So what do they say? A contract between the creditor and the principal debtor by which the creditor makes a composition with or promises to give time to or promises not to sue. So what is being contemplated here is an express contract. See, suppose I go to him and ask him for some money. He says, give me 2 months time. I have an understanding, it will not affect it. But suppose I have an agreement with him. I hereby agree to take, instead of 5 lakhs, which is the amount of loan guaranteed, I agreed to take 4 lakhs and release you. Gone. Without the assent of the surety, this happens, surety is discharged. Or in writing, in an express contract, oral or writing, he agrees to give time. I hereby agree not to sue you for the next 6 months. Or I give you 6 months time. But all this is possible if the surety is confirming it and surety is giving his assent. Assent means agreeing. Some have assented. Okay. Some cases are there where this principle won't apply. Okay. What are they? 1. Surety not discharged when agreement is made with the third person to give time to principal debtor. Not with principal debtor. It's done with some other person. Okay. Now that's a different contract altogether. Creditor's forbearance to sue does not discharge surety. Please distinguish between express contract to give time or not to sue from forbearance. Mere forbearance. I'm giving an example again and again to help you understand. Wrap your mind around this. I am a practical businessman. I go to his house. I am the principal creditor. I go to his shop and ask him, please pay. He gives a genuine reason, sir, boss, my money is yet to come. 100% I'll give you 2 months later. I believe him and I will not sue him. Mere forbearance. Okay. on the part of the principal creditor to sue the principal debtor or to enforce any other remedy against him. Suppose I have some goods of his with me, I can exercise a lien. We'll see that. Such things will not discharge the surety, provided there is a clear cut, there is no provision in the contract. The guarantees, see, most banks, when they get you into a contract of guarantee, they give a guarantee, they'll put a strict clause. You should not do anything without my consent. Once that is there, then even forbearance is not allowed. Okay. Many cases will work on this 135. 135 is a little complicated. So read the facts very clearly before you decide. Don't be in a hurry and don't be too complicated thinking also. Simple thinking. Think like the surety. Think like the principal creditor. Put yourself in their shoes in the problem. Remember 135. 135 is the mother section. Was there a contract or was it mere forbearance? Just be clear. That's all. And here the 136 is third person. Look out for that. If the contract is between the third person and the principal creditor, no problem. Okay. Act or omission impairing surety's eventual remedy. Now, you might ask me, and I will also ask you, why Macaulay put two things here. Same. Does any act or omission legal principle of which the legal consequence of which is the discharge? Whereas here, omission impairing surety's eventual remedy. Strictly speaking, my example of not suing within the period of limitation comes under 139 because it is an act of omission impairing the surety's eventual remedy. Okay. If the creditor does any act which is inconsistent with the rights of the surety or omits to do any act which his duty to the surety requires him to do, and the eventual remedy of the surety himself against the principal debtor is thereby impaired, the surety is discharged. I'll give two examples to help you understand. One is the earlier example I gave you. The debt is due. From the due date of the debtor, within 3 years, I have to file a suit, principal creditor. I don't file. I'm maybe without knowledge or casual or laziness. Period of limitation over. Now nobody can sue. Either the creditor nor the surety. So surety's right is impaired. Eventual remedy is impaired. Therefore, once this fellow does not file a suit within the period of limitation, the surety is discharged. Second example, the principal debtor has given, for example, he is taking a loan of 5 lakhs for his daughter's marriage. The surety is given a guarantee. As a security, the debtor has given some gold jewelry. For 5 lakhs loan, he has given 7 lakhs worth of jewelry, which is with the principal creditor. Later on, you will see pledge. You will understand it. It is that movable goods are being given as a security for repayment of your loan. No problem. Now, so when the surety gave the guarantee, he may or may not know about this. But there is a security there. Tomorrow, if the debtor does not pay, the creditor can sell the jewelry. In case he invokes the guarantee, he can. Then the surety gets the right to those securities. Now, let us say, for example, obviously, you will ask me a practical question. Hitesh Jain will be eager to ask this question. Don't ask it. If 7 lakhs worth of jewelry is there, why guarantee? Agreed. Let us say it's a 3 lakhs. Loan is 5 lakhs. Guarantee is for 5 lakhs. Is still 3 lakhs worth of jewelry is also taken. No problem. So now this 3 lakhs is an available security for the surety. In case he pays the entire 5 lakhs with interest, then at least this 3 lakhs jewelry is there for him. Balance, he can go to the principal debtor. Hello? So, in that case, now the principal creditor does not do anything to impair the eventual remedy, which is selling the jewelry, which is given as security. Now, what the principal creditor may do, out of friendship between the principal creditor and principal debtor, the principal creditor will call the principal debtor. Now, the principal debtor will go to the principal creditor and say, hey, I borrowed 5 lakhs for my daughter's marriage. Now, my wife wants to wear the jewelry at the marriage time. Trust me, I will come and give it back to you. Who will trust? So, he gives back few jewels. Say 1 lakh worth or 2 lakhs worth of jewels, he gives back. Sorry, straight away discharge because it is an act. It's an act of the creditor by which he is impairing the surety's eventual remedy. Handing over the jewelry back to the principal debtor, sorry, not done. Automatically the surety is discharged. Full amount, the entire amount is gone. No, again, I can preempt one of your questions and say, entire amount will be discharged. Not only 2 lakhs, entire amount will be discharged. Because the essence of the contract of guarantee is, once the principal creditor has got a guarantee from the surety, anything he does, he should do in the interest of the surety. If he impairs the eventual remedy of the surety, it's gone. Suppose the principal debtor and principal creditor have misrepresented, where the principal creditor has misrepresented something about the transaction, where there's a misrepresentation, then you know very well, any surety given, any guarantee which has been obtained by means of misrepresentation by the creditor or with his knowledge and assent concerning a material part of the transaction is invalid. Okay? It could be anything where the surety honestly believes that is the fact, but it is not so. Then the contract of guarantee is invalid. Okay? Where there is a concealment of a material fact or a material circumstance, then it is invalid. One example I can give is, the principal debtor may be insolvent. The principal debtor, on the date of the guarantee, the principal debtor may be insolvent. Wrap your minds around this concept. It is a little difficult to understand. The principal creditor has already lent 1 crore to the debtor. 1 crore to the debtor. Now, these two fellows are in, they are together. What they do, they know very well this fellow is insolvent. So they go to the guarantor who is perfectly solvent, who has money, and the principal debtor gives a sub-story saying, I'm like this guy is pressing me. Kindly give him a guarantee to repay the loan. Now, at the time when the guarantee was given, both the principal debtor and the creditor know that the debtor is insolvent. Insolvent means what? Yes, his liabilities are more than his assets. And one of the liabilities is the creditor's liability. So the surety, believing them that the principal debtor is capable of paying the debt, gives the guarantee. Now, later on, the debtor files the insolvency petition. That's it. So, but the guarantee is still valid. The creditor will come to the surety and say, pay my money. You go and sue him, you do whatever you want in the insolvency proceedings. Now, here at this time, the surety can invoke 142. He can say, look here, you misrepresented it to me. You concealed it. I can invoke 143 also. You concealed the fact that this fellow is, but then you have to prove that he knew about the insolvency. Okay. I'm only giving some examples practically to help you to understand the sections. Okay. We will come to indemnity of LIC a little later. But it's good, Ayush, that you mentioned it. How creditor can proceed against surety before proceeding against principal debtor. Now, the whole point of a contract of guarantee is that the creditor will... No, did I say before proceeding against principal debtor? No. I don't know how Somesh got this concept. No. See, first you have to file a suit against the principal debtor. And then, in addition to the principal debtor, the guarantee is also there. You can also invoke the guarantee. You can file a suit against... See, you can ask the surety to make good your loss. That is the whole concept of a guarantee, right? So, creditor can... See, he will proceed mutually against them. He has a choice now. He can proceed against the principal debtor or... See, what he has to do is to send a notice to the principal debtor. Principal debtor does not pay. He may say within 30 days if I don't receive. Once within 30 days the money has not come, he can proceed against the surety. That is how it should be. But filing a suit is different. The suit should be filed within 3 years. Okay. Suppose within the 3-year time itself the guarantee is invoked, then the surety will itself file a suit against the principal debtor. But suppose nearing the end of the third year, this fellow is invoking the guarantee. It is the duty of the principal creditor to file the suit against the debtor. Somesh, the best of my knowledge, I have clarified to you. Kindly confirm if you have understood. The creditor should proceed against the principal debtor. But if the principal debtor does not pay, the whole point of a guarantee is I don't have to waste my time. So suppose I have given the loan is due on such and such a date. Immediately I can go ask him for the money. He does not pay. Then I can go to the surety. Then once the surety pays me, he will file a suit against the principal debtor. This is a sequence. But suppose I keep quiet, I give, allow this to go on till the very end of the period of limitation. Last minute, with just 5 days to go, I invoke this guarantee. Sorry. Because you should have filed a suit, within the period of limitation. So that is the point. Novation also includes variation step. No, variation is different, novation is different. Novation is where the entire contract is replaced by a new contract. Variance in terms is where the original contract is amended. Okay. Either way, surety's consent is needed. Okay. You are right. If there is any variance in terms, variance is already covered in 133. That is automatically covered there. Variance can happen by just a mutual exchange of letters and all. Whereas when a fresh or new contract is there, novation, both are discharged. Okay, automatically revoked. Yes. Okay. When I come to subrogation, I will explain it to you. Okay. See, with regard to not being opening and all, you please talk to the tech support. Okay. If it's an individual problem, then please don't expect it to be done again and again. Talk to tech support. If they ask me to do it, I will definitely reload it. If the ICAI Board of Studies tech support want me to reload it, I will reload it. Okay. On the request of students, I cannot do it because I've already uploaded. If it is a problem and you report it to the tech support, they will ask me to reload it. At which point in time, I surely reload it. So during the session, don't quote a study material because I don't have the study material with me. Be a little more clear, Somesh. And whatever you want to ask, you ask here because I don't have the study material here with me. So kindly understand my problem. So even just give me what your question is in simple English, I will answer you. Because I don't have the institute material with me. And I'm still not clear what your question is. Maybe something is there on 1.13. I'm sure it is there. But what is your doubt? Principal. Your basic doubt is principal creditor can proceed against surety before. Creditor can proceed against the surety. That is the whole concept of guarantee. I don't have to waste my time filing a suit on the principal debtor. I will proceed against the surety and enforce the guarantee. So he can. So to answer the question, creditor can the surety without proceeding against the principal debtor. Why should I? You have promised to, in case he doesn't pay, I only have to ensure that I have made a express request for him to pay. Ideally, you send a notice to him in writing, copy mark to surety, asking him to pay. Maybe give him 2 times, good opportunity to pay. Then you inform the surety. He is not paying, you pay. That's all. You did not file a suit. But the period of limitation, that's where you have to understand. See, you should not be so hidebound and blindly. See, there is a slight difference. This fellow is keeping on giving time. Now, period of limitation is going to get over. At that point in time, he doesn't proceed against the principal debtor. Nobody can proceed. Therefore, he has to file the suit. For not doing that would amount to an act of omission, impairing the eventual remedy of the surety. So, once you really understand it, it will be there. Again and again, don't say given in. What is the doubt? What is the doubt? See, please don't misunderstand me, Somesh. You are a little bit, you have to help me out here. What is your doubt? Given in. What is given and why? This was taught to you. Absolutely, the liability, the surety's liability is coextensive with that of the principal debtor. So, what is your doubt? I have answered your doubt. Please, Somesh, this is not fair on your part. Ask your doubt. I definitely the liability. So, instead of proceeding against the principal debtor, I can proceed against the surety. That is all. Why should I proceed against the principal debtor? If that is your doubt, I have clarified it. If you got any other doubt, please clarify it. Please. Have the patience to write a query rather than saying given in section 128, given in 11.13. What do you mean? Yes, it is given. The liability of the surety is coextensive with that of the principal debtor. That's all 128. What do you mean by that? If the principal debtor is liable, surety is also liable. So instead of proceeding against the principal debtor, I can proceed against the surety. Again, procedure-wise, you have to give some reasonable notice to the principal debtor. Next day, you cannot go and invoke the guarantee. You give in fact, for example, if I am the surety and the due date for paying the loan is there and immediately the principal creditor comes to me and says, pay me, I will immediately tell him, boss, ask him. Let him say, I cannot pay. Then I will pay. So that much, make him tell clearly that he cannot pay. Then only I will pay, because my liability happens only when he is unable to pay, right? Prove that to me, that he is not capable of paying. Then I will pay. That is the only thing that surety can ask. Other than that, if the principal debtor clearly is not willing, unwilling, unable, no problem. So the surety also will take effort to go to the principal debtor and say, what's happening, pay him and all. All that will happen practically, okay? But finally, if the debtor is not paying, the guarantor is liable. So usually what they will do when they file the suit against the principal debtor, they will include the guarantor also as a correspondent. There is a way it's normally done. I'm giving it very practically. So, okay. Thank you, Somesh. Because sometimes, why? Because the format in which we are doing this classes is online. I cannot even see your face. Suppose this is a real class, I can see your face. I know body language. I can study. Sometimes when a student has not understood, by seeing his or her face, I will know in the class. Immediately, I will explain it again. I won't even wait for them to ask again. Because some students will be shy. They won't talk freely. I will ask, have you you're not? Yes, sir. Then I idea of this is, as a teacher, I want you to understand clearly. That is my goal here. Okay, beautiful. Somesh Karat. So, Karat. So, you are from which part of India? Misrepresentation may be done by sundry debtor or creditor. No, sir. No, let us read it correctly. Any guarantee which has been obtained by means of misrepresentation made by the creditor or with his knowledge and assent. I think the section is very clear. To answer Ankur's question, it is the creditor who does. In the case of insolvency itself, the creditor goes to the surety and says, please give a debt. Principal debtor is so-and-so, please give a guarantee. Now, the creditor misrepresents to the surety that he is solvent. Okay. Or the creditor knows that he is insolvent. When the principal debtor approaches the surety, the creditor does not inform the surety. He has knowledge. Okay. Again, the concealment is to be done by the creditor, not by the principal debtor. Okay. That is how the sections are worded. Jamil Nathani, what is his doubt? If the variation is beneficial, then no. See, that beneficial to surety, please be very, very careful. That's not part of the section. That's the decision in the case. Okay. Aniruddhan's case, where they said, be careful, it should be beneficial to the surety. Then the surety is not discharged. Okay. Correct. Whole amount is discharged. Okay. If the variation is beneficial to the surety, he is not discharged. That's what it means here. But beneficial to the surety, not to the principal debtor. Please understand. Okay. Giving time to the principal debtor for repayment is not beneficial to the surety. And if the period of limitation is exceeded, it may become prejudicial to his final remedies. Okay. That's what it is. Wow. I could know that you are from Maharashtra. Nice. Aurangabad. Great. One of the few places in India where I have not come is Aurangabad. Hopefully, I'll come one of these days next year. I plan to visit. Let us hope. Okay. Nice, Somesh. Thanks for confirming that you're from Maharashtra. Good. Aurangabad. Okay, moving on. First, you should understand what is co-surety. When the same debt is guaranteed by more than one person, they are called co-surety. Co-surety. Co-surety means same amount is guaranteed by more than one person. Now, where a person gives a guarantee upon contract that the creditor shall not act upon it until another person has joined as co-surety, the guarantee is not valid if that other person does not join. So, B wants to borrow money from A. A is the principal creditor. Now, A says, I will give the loan if C is the guarantor. Now, C says, I will be the surety, but only if D also becomes co-surety. Okay. So, here is the example given. Let's take this and understand. A gives the guarantee to B. B is the principal creditor here. A is the surety. Regarding C's debt. C is the principal debtor. Now, one of the conditions A has given is surety will. I will be the surety only if D joins as co-surety. So, A's surety is contingent upon D joining as co-surety. So, A has very clearly told B shall not act. So, before D joins as a co-surety, or if D does not join as a co-surety, but B gives a loan to C, then the guarantee is invalid. A is not liable. Okay. Because one of the important conditions of the guarantee is I will become surety only if D joins. A is very clear. D does not join, then the surety is fairly simple. I don't think any confusion here. Okay, so we have seen discharge of surety. Discharge of surety is very, very important. Now we are going to see rights of a surety. He has got 3 types of rights. Surety has got many rights. First is against the principal debtor. After all, he is the starting of the party. He is the fellow who borrowed the money and run away. So I have a right against him. Okay. Also, the credit to certain things, or I have certain rights against the creditor. Similarly, if there are co-sureties, then we are jointly liable. Therefore, I have a right to collect my share from or if I have paid for all, I can collect from the others. I have a right to collect the contribution. I have a duty to contribute also. So if you ask me duties of a surety, duty is to contribute. Similarly, one of the duties is to settle the creditor. The most important duty in the guarantee is the surety to settle the creditor. Only then he gets all these rights. So, situation is very clear. The principal debtor has borrowed money. Principal creditor has lent. Principal creditor has done nothing to prejudice the interest of the surety. Everything has gone well. He has given the notice. Fellow has not paid. Period of limitation is there. Then he goes to the surety and says, pay me. Surety has to pay. Once the surety pays, then he gets all these rights. Right? First right is the right of subrogation. Subrogation. Okay, it's a very interesting word. Somebody was asking, what is meaning of subrogation? Sushil Kumar Barik, please concentrate. Now I'm going to explain subrogation. Subrogation means I will step into the shoes of the other party. I will get all the liabilities and I will get all the rights which the other party had. Principle of subrogation. Once the surety discharges all his liability on the guarantee, please underline this. So, the principal creditor comes to me and says, he has not paid, pay me. I immediately settle him in full. Once I settle him, then only I get the principle of subrogation, which means once I settle him, whatever rights the principal creditor had against the principal debtor will now be my rights. right to sue him, all that, okay, will become my right. Whatever the principal creditor could have done to collect the debt, I can do. He steps into the shoes of the creditor and enjoys all the remedies the creditor had against the principal debtor for recovering his dues. This principle is called subrogation. See, creditor has now all those rights will be available with the principal creditor. Okay. 144 is a fairly simple section, Mahadev. The example is given there, clearly given there. A gives a guarantee to B regarding C's debt. Now A is the single surety, but while giving the guarantee, A says, I will not be surety unless D joins. Co-surety. Then, if D does not join, the guarantee itself is not. Okay, fairly simple. I seriously don't know where your need for example. Example is given here. You can see that it is example given in the act itself. Are you clear, Mahadevji? If surety is aware about misrepresentation and he gives the guarantee, I don't know how, students. Sir, if you are aware about the misrepresentation, you tell me, Ankurji, you are aware about the misrepresentation. Will you give? Sir, be practical, boss. Sorry to say, not you, any person being aware of the misrepresentation, gives the guarantee, he is not fit to be a businessman. He is fit to suffer. Such a buddhu, I use the word very carefully, buddhu. Okay, he is aware of the misrepresentation and then gives the guarantee. Sir, be practical, Baba. You are going to become a chartered accountant. For the sake of asking question, don't ask like this. Ankur, please, it's a real classroom. You will understand that I am joking. So you can see I am smiling. The intention is not to hurt you, Ankurji, but to make you a practical chartered accountant rather than a student. You are asking this doubt like a student. Student wants to ask a doubt, whereas chartered accountants give solutions. Okay. Now, so if your client is knowing that there is a problem, he is a buddhu and he deserves to lose. He will not be discharged. To answer your question straight, he will not be discharged. Okay. Nobody will give ma. That's the whole point. When I know that there is a weakness in that whole thing, why will I put my foot there? Yeah, danger. Don't even go there. In spite of that, if some donkey is doing it, then that donkey is liable. Okay. Nothing can be done about it. I can give you some examples of idiots who have done it also. They are pure idiots. That is, for close relatives like daughter, son-in-law will come and do all this nonsense. Knowing that the son-in-law is a rascal, the father-in-law will do all this. I have no such cases. Those fellows deserve to lose their money. Out of love and affection, if they're going to become fools, they deserve to lose the money. That's my humble view. Okay. Knowing that the son-in-law is a useless fellow, he has no assets there, you guarantee. Huh? Then you are, sorry to say, liable. See, so, boss, sorry to Kankur, the intention was not to hurt you. I hope you understood that. But sometimes doubts by students. This is not the first time, boss. I'm teaching for what now? 29, 30 years now I'm teaching. Every time I get a doubt like this, I think, how is this possible? Practical, weak. See, whenever you walk, whenever you think in the exam hall, or whenever you think as a professional in future, okay, have common sense on your right hand. Have humor on your left hand side. You have my point? Common sense on the right hand. Humor on the left hand. Humor means ability to laugh. The person who cannot laugh cannot think. Only people who can laugh can think. Because people who are always serious, they will make all sorts of blunders. Whereas a man who can laugh at himself and laugh at a good joke, he is always aware of what is happening. He will not so easily make mistakes. Because when he sees absurdity, he will see the absurdity and laugh. Once the humor is there, then your life will become. Take it from me. Many times I see CA students becoming so serious. Chartered accountants becoming very serious. Why? Common sense, humor. Everything else will follow. Knowledge of law. You take the entire income tax act, dissolve it in hydrochloric acid and drink it. You will become knowledgeable. but you will not become a great chartered accountant unless you have common sense and humor. Please. Some of the greatest experts on income tax, like for example, T. Bhanushekhar in Chennai, they have both common sense and humor when they talk. And that's why they are able to win cases in tribunal. Not because they, of course, knowledge is here. Knowledge is necessary. But mere knowledge without common sense, without humor, boring. Don't lead a boring life. Lead a fun life with a lot of fun in it. Okay. Subrogation, understood. Barik, have you understood subrogation? Yes. Please confirm you have understood. Once I discharge, once the surety discharges all the liability, he will obtain all the rights with the principal creditor and debtor act. Everything that the creditor had, principal debtor will have now. Okay. That is principle of. Okay. 145, we already saw. In the diagram itself, I told you. There are 3 contracts. One then there is a contract between the surety and the principal creditor by which surety promises to pay. In case then there is an implied promise by the principal debtor. It need not be expressed. Whereas the first 2 contracts have to be expressed by words, oral or written, or by course of conduct. But the indemnity is an implied contract. The minute the surety discharges the creditor, there is a duty on the part of the principal debtor to indemnify the surety. Okay, this is the right which directly I can go against the principal debtor. Okay, please understand, these are rights against the principal debtor. Once the surety has discharged the promise, then there is an automatic, duty on the part of the principal debtor to indemnify the surety, whatever. See, I paid him 2 lakhs with interest on your behalf. There is no need for a separate contract between you and me. I can file a suit against you. Even without that, there is an implied contract of indemnity. The principal debtor cannot just like that do like this and say, go. No. Even if there is no direct contract between the principal, the surety and the debtor has to make good the loss. Contract of indemnity is to make good the loss suffered by the other party. So as between surety and the debtor, there is a indemnity. The surety is the indemnified. The debtor is the indemnifier. Okay. Right. Suppose some security is available that is sold. Beyond the security, there is something due. That only principal debtor has to pay. See, it's a very interesting illustration. A guarantees to C to the extent of 2,000 rupees. If you remember, these examples are taken from the act, from the Contract Act itself. These examples are given by Lord Macaulay. Now, when Lord Macaulay wrote the Act, 2,000 rupees was huge amount. You calculate pre-independence India, what was 1 rupee value? 1 rupee was equal to 1 pound. 1 rupee was equal to 1 pound. Today, I don't know what the pound is. Maybe a little more than 100. So multiply, you will know what is today's value of 2,000 rupees. Okay, in those days. So it was in those days 1 rupee was equal to 1 pound, 1 British pound, right? In India, it was called rupiah, and there it was called pound. Okay. Today, of course, the pound is worth 100. 100 rupees makes 1 pound. So take it up. Now, so don't think these are small amounts. In those days, 2,000 rupees was a huge amount. Okay. Why those days? 1987, I qualified as chartered accountant, joined Pricewaterhouse. My salary, United Insurance, my stipend was 500 rupees. As an industrial trainee, 500 rupees. Articleship, 300 rupees. And my first salary from Pricewaterhouse was 7,000 rupees. Imagine, okay, 7,000 rupees, but that was a huge princely sum. I could not spend it. I could not spend it. I could save it because half the time I'll travel on audits. Half the time I'll be out of Chennai. and everything will be taken care by the client, including toothpaste, toothbrush, everything will be given by the client. I used to go for Birla company audits and all. One good thing about Birla is they will give everything. Okay, and nothing is by you. All the money will go into the bank and stay. Now, so 2,000 rupees, that was 87, mind you. Imagine, this is before 1870s. So 2,000 rupees was a huge amount. So A guarantees to C to the extent of 2,000 rupees payment for rice to be supplied by C to B. Right, sir? So C is the, again and again, when you get these ABC examples, fix the guys. A is the surety, C is the principal creditor, B is the principal debtor. Fix that somewhere so that you won't get confused while writing the answer. Now C, the principal creditor, supplies to B, the debtor, for an amount lesser than 2,000 rupees, but obtains from A payment of the sum of 2,000 rupees. Now, again, A foolishly pays it. Point is, let us say that C was supplying only 1,500 worth of rice, but that is not paid. Fellow goes to the surety and says, hey, you pay me 2,000 rupees. He is not paying. Again, this is stupidity on the part of A, but he pays 2,000 to C. Now, 1,500 is the amount actual supplied. Okay. 2,000 is the amount he has paid. Now, A cannot recover from B more than the price of the rice actually supplied. Got it? Because how much does B owe? B owes only 1,500. But A has paid 2,000. Now, A cannot recover from B more than the price of the rice actually supplied. Do you notice some undercurrent in this whole? Bandred is correct. I'm only comparing rupee exchange rate only. But exchange rate itself will include an element of inflation. Because anyway, it's too unnecessary economics. Yeah, I should not have taken it myself. Yeah. So if you take inflation into account, this will be huge today. In real terms, rupee terms today. Now, I hope this is clear. This example is clear. Some of you may get angry because, how, sir, he had given 2,000 rupees, sir. No. Though he gave 2,000 rupees, the actual amount due by B to C is only the amount of the price of the rice actually supplied. For example, I give 1,500. So that is the amount A can recover from B. Now, another practical question. How about the balance 500 rupees? You have to recover it from C only. Wrongly taken from you, you have to take it from him. Okay. You have right against C. I'm sorry. Yeah, you have right against C. You can go and collect it from him. Okay. But not from B. That is the question. See, in the exam also, question in the exam will be, can A recover 2,000 rupees from B? The answer is no. Will A lose the 500 rupees? Answer is depends. If he is able to go to C and get the money, that is capability. From B, you will get only 1,500. Got it? Correct. Dhaneshwari Murali case. I think it's Dhaneshwari Murali or Marali. I don't know. So she says, absolutely, indemnity is where you make good the exact amount. What I owe, you should have paid. You pay him another more than that, that is your donation. What I owe him, I will give. Okay. Thank you. Now, here, so we have completed rights against the principal debtor. Now go to surety. See, this is a good example where I can give a question in the exam, where I can catch you out. Because some of you may write 2,000. And this can become a multiple choice question also. I can give you different amounts and say which is the amount. So, exact amount paid only can be taken. The market value of A, or rather principal, the surety gives the guarantee. Idea is, if at the time of giving the guarantee, the principal debtor gives some security to the creditor. In our example, I am giving gold as a simple example. So The principal creditor lends 5 lakhs to the principal debtor. Principal debtor gives 3 lakhs worth of gold, safely kept. I am the guarantor, or the surety is there. Surety says, in case he does not pay, I will pay. Now, principal debtor does not pay. Then the creditor can enforce his debt against him. He does it. He does not pay. Then he comes to the surety. Surety pays. Once I pay the amount, that security now comes to me. As a surety, I am entitled to the benefit of every security which the creditor had against the principal debtor at the time when the contract of suretyship is entered into. I have done this once. On behalf of my father. Father guaranteed a debt. I'm sharing with you a very personal thing. There is one wrong. My father, a very senior chartered accountant, was a good man. And that is the problem. He was a good man. So he used to sign guarantees left, and center for people who will come and talk all nonsense to him, take the guarantee. The creditor will give the money, guarantee will be given by my father. My father luckily had a lot of money, he used to settle. But in one case, I told my father, you are going to settle, no problem. He has given to gold to the Sindhi lender. I knew that lady myself. So I said, I know her, I will go. So I settled her. She was very happy to receive the money. Then I said, keep all the gold on the table. She kept. Then I took it and came back. She was laughing. She said, Shrikant, your father will never do this. You came and collected the security and went. I said, definitely, ma'am. It is mine now. I can keep it. Then the principal debtor came to my house and started creating problem. I said, look here. You pay the money, take the jewelry. That is all. Okay. Sorry, I sound very, very like a money lender. Now, what to do? I learned most of my financial practices from Sindhis. I have a lot of good Sindhi friends, and I learned how to be careful in business. I learned from the Sindhi community. It's one of the best communities, real business people. I learned how to calculate interest, how to be thorough in that. And so very clear. When it comes to business, there is no question of friendship. There is no question of love, affection. And all. If you want to be a loving person, if you want to be, don't come to CA, don't be in finance business. Yeah. Become a Swamiji or do such an NGO. Don't come here. Because once you get into finance, it's a dog-eat-dog world. You have to be careful all the time. Okay? I'm not giving this as to make you afraid, but to help you understand, you're going to become an expert in an area, just like a medical professional is into body, physical body, you and I are going to be in money. So when you come to money, there is no question of casual attitude or love and affection. Please have understanding. No, and what understanding? Put it in writing. Sorry. Sometimes you have to be very strict. Okay? Otherwise, who will be the affected party? You. So be careful. Especially when you are a CFO of a company or a credit monitoring authority in a bank or a person who is sanctioning the loan in the bank. Be very, very careful. There's no need. Too much caution, therefore, cannot be taken while dealing with money. You should be taking too much caution. So, any security that the creditor had will be now available to the surety. Please look at this line. I think that is very interesting and important. Right? This is irrespective of whether the surety knows of the existence of such security or not. Actually, in my case, my father was not even aware of the security being with the lady, with the Sindhi lady. He didn't even know that. He's not aware of this. Then casually, I was talking to her. She said, you know that fellow has given jewelry, Shrikant. Are you aware of that? I said, I don't know. Nobody knows. I said, look here. She in fact, she disclosed it and she gave it to me in a way. But my father is not aware. When I told him that jewelry is there, why are you not taking it? He said, it's okay. Poor fellow, let him take that jewelry. I said, look here, don't do this. Okay, and I got it. Then later on, the principal debtor came, paid every pie with interest, took the jewelry and went. Okay. Now, sorry, I'm giving you some practical examples from my own life. 57-year-old man I have seen and learned a lot of lessons. Okay, so be very careful is the lesson I'm giving you. These are all practical topics. They are not textbook things. They are real life things. So it is, you have to understand it practically. Then you will automatically talk with common sense. Once your money is there, you will understand the law very clearly. And you won't make any mistakes. Only when it is hypothetical, we can ask doubts. When it is your own money, you will not have any doubts. You will understand the law very clearly. So always think as if it is your money there. Okay. If the creditor loses or without the consent of the surety parts with such security, the surety is discharged to the extent of the value of the security. Maybe earlier I told the full amount. Here, only to the extent of the value of the security. I'm very sorry. I made that mistake. In this example, I told the entire is discharged. No. Okay. I'm sorry about it. This is impairing the surety's remedy. Now I gave an example. Same example I gave at that time. Okay. So to the extent of the surety, he is discharged. To the extent of the security which is lost, he is discharged. Okay. I'm sorry. Maybe if I miscommunicated, I'm very, very sorry. Prabhas Jain, that's a good one. Yeah. When we deal with money, we should forget honey, sweet and casual behavior. Okay, whatever. Correct. Absolutely correct. You're right. Okay. Wonderful. Rhyming word. Okay. In fact, you are reminding me of my trip to Thailand where, Bangkok, most ladies in Bangkok, they talk to the husband, they will say, no money, no honey. Okay. That's what they say. So you are reminding me of that. Good. So, okay. C advances to B to like myself, I made a mistake. When the security is returned by the surety or lost by the surety, by the creditor, the surety is discharged only to the extent of the value of the security. I'm repeating, if any security is there, whether the surety knows about it or not, if the creditor loses it or parts with it or gives it back to the debtor, okay, then the surety is discharged to the extent of the value of the security only. And I've corrected myself 3 times, so sorry. So here's a simple example. C advances to B rupees 2 lakhs on the guarantee of A. C has also taken a further security for the same borrowing by mortgage of B's furniture worth rupees 2 lakhs without knowledge of A. So he has taken a borrowing mortgage of B's furniture worth 2 lakhs. So there is a mortgage. Actually, the word mortgage, I don't know how far that is correct, used in the exam, maybe used in the act also, but actually this is a pledge. Because when any movable goods are given as security for payment of a debt, it is called pledge. When immovable property is given, it is called mortgage. When immovable property, when a land or building is given as a security, it is called mortgage. But then they are using it chalo. The point is, C has taken a security of B's furniture for 2 lakhs without knowledge of A. Does not matter. Surety does not know, does not matter. C cancels the mortgage. Means what? He releases the furniture. He says, furniture, no more. Right. So he is losing or parting with the security without the knowledge or consent of A. Now the surety is discharged to the extent of the value of the security. After 6 months, B becomes insolvent. Now when he becomes insolvent, his assets will be sold and liabilities will be paid. Now, if this mortgage is not discharged or if that security is not given up, then C would have been a secured creditor. So to the extent of the value of the furniture, he would have taken that money. But that is now not available to the creditor surety. Why? Because the creditor cancelled the mortgage. Okay. So A is definitely liable on the 2 lakhs. But to the extent of the market value of the furniture, 80,000, he need not settle. To the extent of the market value of the furniture, market value. Because once B becomes insolvent, what will happen? The furniture will be sold. When they are sold, they will get 80,000. Now, to that extent, the surety could have got that now. That security was parted. Therefore, A can, say, I will not pay you 80,000. That is your mistake. You should not have cancelled the mortgage. Without my knowledge or without the knowledge of A, you did it. Without my knowledge, without my consent, you did it. Therefore, to that extent, you bear the loss. Balance 1,20,000, take it. So, liability is 20. This again could easily become a multiple choice question. All I have to do is the liability of A under the contract is 2 lakhs, 1,20,000, some other two stupid numbers, and then ask you that. So this can be easily see, because it is multiple choice, it doesn't mean that you have to think less. You have to do the same amount of thinking, except that you don't have to write more. You simply have to choose a option. And so. Oh, really? I didn't. Same case happened with my. I don't know. Buddha in Hindi means old man. I don't know. Buddha is fool. Buddha, I think, is old man, right? Am I correct, Bandreddy? You're not. Buddha means old man. Buddha is full. Okay. Am I correct? Because I'm not a native speaker of Hindi. Okay. I'm not a. My mother tongue is not Hindi. Nobody's mother tongue is Hindi. Please. Nobody's mother tongue is Hindi. It is not a mother tongue for anybody. Check it out. You go back and back and back to your ancestry. There will be another language there, which all of which has now become the so-called common language called Hindi. Okay. So, for example, if you're a Maharashtrian, it will be Marathi. If you're a Gujarati, it will be Gujarati or Kutchi, okay, or Bhojpuri, Maithili. There are so many languages. Hindi is nobody's mother tongue. Okay. Definitely not mine. But I'm trying to pick up Hindi words. Right? Co-sureties. Again, you know the co-surety. When the same debt is guaranteed by 2 or more persons, they are called co-sureties. Clear? Combined liability. Okay. Now, please, I have put it in capital letters. In the absence of any contract to the contrary. See, if the contract, if the guarantee, if there is no contract to the contrary between them, the co-sureties are liable to pay each an equal share of the whole debt or that part of it which remains unpaid by the principal debtor, whether under the same or different contract. See, there may be 3 different contracts of guarantee. The 3 co-sureties may not even know about the existence of each other. But once they settle the debt, they are entitled to share and they are duty bound to share. Entitled and bound. Similar to the liability of partners. Partners are jointly and severally liable. No? So one partner settles, what happens? He is entitled to collect it from the other partners. Obviously, in the ratio, it is settled, or if nothing is mentioned, equally. Please understand. Profit ratio is different. Sharing of debt is different. Garner versus Murray and all that. Be careful. I'm not even going there. Partnership is different. What I'm trying to say is, if there is no contract to the contrary, equally. But if there is a contract in that way, but they are entitled to get it from the others and they are bound to pay it to the guy who has paid. Co-sureties who are bound in different sums to pay equally as far as the limits of their respective obligations permit. 147. I will give an example, you will understand easily. You will understand easily. I will give an example, you will understand 147 easily. Give the numerical example. Basically equal. Let's look at this. D was in urgent need of money amounting to 5 lakhs. He asked Mr. K for the money. K lent the money on the sureties of A, B and N. Why A, B and N, I don't know. A, B and N. Why not C, I don't know. N. Without a contract between them in case of default in repayment of money by D to K. So there is no contract between A, B and N. Now D makes a default in payment. Okay. Puts the namam and goes. Now B refused to contribute. Can B do that? First of all, what is the liability? Equal. Unfortunately, 5 lakhs is not exactly divisible by 3. What will be 5 lakhs by 3? I don't know. Okay. Equal liability. 1/3, 1/3, 1/3. How can B say I will not pay? He has to pay. B is liable. The point is, B cannot say, hey, there is no contract between us to contribute and all. He says, what the hell? There is no need between the co-sureties. Okay. Whether with or without the knowledge of each other, 146. Okay. Whether with or without the knowledge. Fact that the co-sureties did not know about their existence is not relevant. There need not be any agreement between them. So long as they have each provided guarantee separately. See, one important point. K cannot get 5 lakhs from all of them. 5 lakhs from all of them. K can get 5 lakhs from all the all the 3 of them. Okay, yeah. Ankur, Patel means Gujarat. You are from Gujarat. Patel, I don't know. I'm asking you. People are getting sensitized to the fact in North that there is another language that is their original language, which is getting slowly lost. Please understand it from that spirit. I have nothing against Hindi. Hindi is a great language. Hamara Bharat, we are all Hindi. Okay, give it all that. But there are other languages which are ancient, which need to be preserved by those speakers. So check out. If you are Patel, what is your original language? Maybe you speak Hindi from childhood. That is good. But check out. Just go and find out your roots. Was there any other language that your community spoke or your geographical area was spoken? This is important. These are our cultural roots. They identify us as Indians. Ignoring them and putting a common rule there. In the same way that, suppose by a quirk of fate, they had some sense and English had become the common language of India, it would have still destroyed the local languages. In a way, Hindi helped us. In the South, at least, because of Hindi, we resisted Hindi. Especially in Tamil Nadu, we resisted Hindi. Because of which our language never died. Telugu never died. Malayalam never died. Because we resisted Hindi and we said, our mother tongue we will speak. Therefore, our mother tongues were protected. And at least spoken languages still continue. Most people know how to write and read those languages also. It's a bigger issue, Ankur. Don't get emotional here. Be practical. Mother tongues are getting dead. I know this is nothing to do with law. Why should Sri even talk about it? But just a casual interest. Coming to the point, there need not be. Now, regarding liability of co-surety, I'll give some examples you will understand. Before that, we have Daneshwari Murali. Co-sureties. Kindly see the spelling. Co-sureties are not severely. They are severally. Yes, they are severally and jointly liable. Correct. Correct. See, no. Please be careful. B is not liable for the whole debt. All of them are jointly liable for the whole debt. Listen to me, Ms. Daneshwari. I'm using English very carefully here. All the co-sureties are jointly liable for the whole debt. But the principal creditor can sue one of them and collect the money for the entire amount, in which case the person who has paid is entitled to contribution from the other co-sureties. This is one of the rights of the surety. Got it? So, your statement, I will correctly correct it. Co-sureties, as you can see the spelling, are severally, jointly and severally liable, which means the principal creditor can file a suit and recover the money from any one of them. Once this fellow settles, then he has the right to recover it from the other 2 or other 3. In the absence of any contract to the contrary, they are liable to pay equal share. If there is a contract, then based on the contract, he can collect it. Even if there is contract, even if they are not aware, the co-sureties are liable to contribute equally. So, don't say B alone is liable. B is jointly liable with A and N. But once B pays, he can collect it from A and N. Okay, and A and N are liable to pay. A and N cannot, you pay. We are all jointly and severally. No. Jointly and severally. Please understand the and there, which is very, very important. Got it. Good. Now, if one of the surety default in contribution, other will bear it. Exactly. Absolutely. In fact, intelligently, what they should do, they should say, I will not pay unless they pay. Okay. No, they won't pay. Then the creditor will have to file a suit. The creditor will have to see. After all, if the surety does not pay, what is the remedy available to the creditor? If the surety does not pay, what is the remedy available to the creditor? He can file a suit against the surety. While filing the suit against B, at that time, first thing B will do he will say, I am not liable. The other two fellows are also liable. Is proof that they are also given a guarantee. You call them also, make them co-respondents. So then, finally, when the suit comes, their recovery may be from B, but A and N also will become co-parties to the suit. Even if the principal creditor does not include, B can include it. B can say they are also liable. Ask them to become co-respondents in the or co-defendant in this suit. The earliest of include so that their names get recorded. Okay. I mean, if you go and get practically into law, practical law is totally different in the courts. Okay. Right. Principles are the same. Okay. B and C. Now here we are giving examples of alternate different approaches. A, B, and C are parties to D for the tax lent to E. Co-surety themselves 1 lakh each. The contract that is 146. Clear? Now A, B, and C are sureties to D for the sum of rupees 1 lakh lent to E, and there is a contract between A, B, and C that A is responsible to 1 quarter, B 1 quarter. That is the XP. Now E makes a default in payment, principal debtor, then D will do the sureties or D will. When the sureties pay, see, again, to answer the question originally raised by Daneshwari, again, any one of them can be sued and any one of them may settle. But once they settle, how will they collect it? Let us say, for example, C B 20,000. Why not equally? Because there is an express contract that A is only for 1/4, B is only for 1/4, C half. So C has to bear half, balance 1/4, he can collect it from A. Suppose all of them pay, then A will pay till 25,000, B 25,000, C 50,000. And surety will be settled. I'm sorry, the principal creditor will be settled. So co-surety liability, you are clear. Now we come to the last example, which is very, very important. That is 147. Co-sureties who are bound in different sums are liable to pay equally as far as the limits of the respective obligations permit. So they are bound in different sums. So at the time of giving the guarantee, A, B, and C are sureties for D. Okay. D is the principal debtor. Okay. They provide 3 separate guarantees for each for a different amount. That is, they are not guaranteeing the entire debt. Please understand the difference. In this example, the entire 3 lakhs was jointly guaranteed by A, B, and C. The entire 1 lakh was jointly guaranteed by A, B, and C. So equal, or if there is a contract in that ratio. Here, fellows are very clear. A is saying, I guarantee up to 1 lakh. B is saying, I guarantee up to 2 lakhs. C is saying, I guarantee up to 4 lakhs. So once 1 lakh limit is reached, thereafter A is not liable. Once 2 lakh limit is reached, B is not liable. Once 4 lakh limit is reached, C is also not liable. Beyond that, if they give. Now you total up this 3, 1 plus 2, 3 plus 4, 7 lakhs. Beyond 7 lakhs, no surety. But up to 7 lakhs, will be the default. Amounts are lent to at point time by A's limit is 1 lakh. Beyond 1 lakh, A is not liable. Suppose the amount due is 4 lakhs. Then A will stop at 1. A's liability is 1. You can't divide 4 by 3 and say pay. No. A's liability is 1. Over. Now B, C, now balance how much? 4 minus 1, 3. That 3 will have to be borne by B and C equally. That is 150, 150. Over. Now, the amount in is 7 lakhs. Now, A limit also over, B also over, C limit also over. If he is giving another 8 lakhs, that extra 1 lakh, nobody is giving a guarantee. He has to collect it from the principal debtor himself. Okay. So this, are you clear about this example? Just 1 or 2 of you, if you confirm you're clear, I'll be happy. And have a doubt. So 146, still 146 is operating equally, but it's read with 147, right? So up to my limit, I'm bound equally. But once my limit is reached, then I'm out. Then the balance amount will be equal till everybody's limit is reached. That's all. Okay. So Raghavan has a doubt. Surety discharge principal creditor, he becomes principal creditor. He doesn't become principal creditor as per subrogation. He doesn't become principal creditor. Why don't, let's be careful about using words. He doesn't become the principal creditor. He gets the same rights as the principal creditor had. But the difference in the wordings, Mr. Raghavan, every word in law should be carefully used. I cannot become the principal creditor. There's principal creditor. You'll get all the principal creditor had. That is not indemnity. That is called subrogation. Indemnity is that liability to compensate the other person for the loss incurred. Okay. Okay. So we have finished indemnity and guarantee. Interesting topic. And I think a little too, but what else? See, after all, contract act is not something that happens in the textbook. It is not something that happens in NDCUP or in your institute or in the. It is something that happens here and life. Every minute, the contract acting on you. My guru, someone always used to say, continuously impacting upon us. It is always there. Every day, today, just after the session is over, when you walk out and do today, check out how many contracting into impliedly, expressly, you're getting into your going to a shop, buying goods, contract. Okay, going to the salon, getting your haircut, contract. Okay. Free of cost. Okay, when you get something free of cost, no, it's a gratuitously done by the institute for your benefit. No contract. Okay, you're enjoying it. That's all. Bailment and pledge. Right. Another special category of contracts. Though words there, 2 words are there, bailment and pledge. They are alag, but similar but not identical. First, we will see bailment. Okay. The topic overview is, first we will see bailment. We will see what is bailment, definition, then duties of Baylor, Bailey. Rights of Baylor, Bailey also is there. Then rights of duties of a finder of goods. We'll see that. Then we'll talk about general lien and particular lien. So that we'll be doing. Then we'll get into pledge. Pledge is a special type of bailment. Pledge is a special type of bailment. It is a bailment. Later on, when you study negotiable instruments, you will see check is a special kind of bill of exchange. Check is also a bill of exchange, but special category. Like that, pledge is a bailment, but special. Something special. Pledge is there for one specific purpose. And so, in addition to the rights available under a bailment contract, pawner and pawnee will have further rights. Some additional rights they will have. Okay. Bailment is derived from the French word bailer, which means to deliver. So handing over. Okay. Important. There is bailment when there is a change of possession. So very important is possession. Very important. There should be a change of possession. Otherwise, there is no bailment. Okay. So section 148 defines bailment. Bailment is the delivery of goods. I cannot overstress this important word. I'm going to highlight it for you. If there is no delivery, there is no bailment. So possession should be transferred. For movable goods, possession is necessary. I have to transfer possession. So bailment is the delivery of goods one by one person to another for some purpose. Upon a contract, that the goods shall, when the purpose is accomplished, be returned or otherwise disposed of according to the directions of the person delivering them. We'll see some examples. So basically, what are the ingredients? It is a contract. It involves delivery of goods. So there is a transfer of possession for a purpose. So there should be a purpose for bailment. Okay. Purpose could be anything. Purpose could be used by the bailee. Purpose could be some work to be done by the bailee on the goods. Or the purpose could be safekeeping. I give something to you and say, keep it safely. Bailment. I'm Baylor, you're bailee. But so delivery of possession. Friends, one more thing I want to stress here, goods. Please distinguish between movable and immovable. Later on, when we come to General Clauses Act, inshallah, I will talk about immovable and movable property. So, bailment deals only with movable goods. That which is goods only, goods. Definition of goods under the Sale of Goods Act. Okay, goods are defined under the Sale of Goods Act. There is a mother definition. Sale of Goods Act is the mother definition. Everything is derived from that. Any movable property of all kinds. Specific exemption, currency, coinage and all that. And standing crops. These are all shares, stocks and bonds, standing crops. They include stocks and shares, but exclude standing crops and coins. That is currency notes. Other than that, everything is goods. Movable. All movable property are goods. Right? For your information. So, immovable property not covered. When I give my house to you, I ask you to occupy my house. It is not bailment. Okay? When I'm saying I'm going to US for, somebody says to you, uncle next door says, we are going to US for 2 months. Here's the key, take it, enjoy. I mean, not enjoy. Please take safe care of my house. Immediately you organize a party in that house, next door. Wow. Okay. No, that is not bailment. Okay. Because it's not goods. So, delivery of goods, transfer of possession for a purpose with the understanding or upon a contract that the goods shall be returned or disposed of. Disposed of. Are you able to understand? I'll give you some examples later, immediately. So, important terminology. The person delivering the goods is called Baylor. The person to whom the goods are delivered is called bailee. Baylor, bailee. I have a library of 23,000 books. As of today, maybe 23,600 books, roughly. In my T Nagar house, office building, second floor, I have a library where I have 23,500 books. Many times people come to my library, they want to read a book. Normally, I will not lend because that is how I built my library, I say. Okay, joke. Okay. Now, but then sometimes when the person is well known to me upon strict understanding and thing, I will lend a book. Classic example of bailment. What is it? There is a delivery of goods. Book is the goods. Delivery by one person, me, Baylor, to the other person, the person who wants to borrow the book, bailee. Okay. What is the purpose? That he will read the book. That's all. I want him to read. Maybe it's an interesting book. It's a motivational book and he is a student and I want him to read it. But of course, normally if it's a student, I'll tell them, pay your read. These books are very rare. Normally, I have a collection of authors, John Grisham, Wilbur Smith, or I have complete sets. So people, they come to my hall for a session. When I conduct a workshop, after that class, they linger and they watch because I am a book lover and I see another book lover and ask, do you like these books? So then this not read that by Frederick Forsyth or Irving Wallace. Take it. Address, please take it. So I book idea is he should read it and return it back. Classic example of but bailment, gratuitous bailment. Why? Because him remuneration. Okay? Or nor am I going to pay him anything. It's a gratuitous bailment. For the bailor or bailee. So, in my example, the bailment exclusive benefit of the bailee. Exclusive benefit of the bailee. The enjoy the book. Okay. Remember, one of the exception is contract of gratuitous bailment. There is really no consideration. See, when at the instance of the promisor, the promisee or any other person, when at the instance of the promisor, the promisee or any other person has done or abstained from doing, does or abstain from doing, promises to or abstain from doing anything, such act becomes consideration for the promise. Here there is no consideration flowing from the bailee. Of course, I am giving consideration in terms of giving the book. Baylor giving consideration. What bailee is giving? Nothing. Therefore, it is called gratuitous bailment. Got it? For the exclusive benefit of the bailee. Why this is important? Because when we see the rights and duties of Baylor and bailee, there will be a slight distinction between gratuitous bailment and non-gratuitous bailment, liability wise, duty wise. That is why you have to understand clearly what is gratuitous bailment, what is non-gratuitous bailment. Where there is no remuneration received by the bailee, okay, then it's a gratuitous bailment. One classic example is lending of a book. See, I gave an example of lending books from a library. It could happen in your case also. You might be attending some class with another friend of yours. You will be taking some notes regularly. That fellow is not coming at all to the class. Now he says, I know you got notes. Can I borrow your notes? Okay, borrow. So you say, chalo, take it. Then you take his address and also on so lane, Hanuman lane, so and so place. Then you go, be careful. And then you go. Then 2 days later, you say, please copy it and give it back to me. I take Xerox and give it back to me. So, is it a bailment? Yes, it is. There is a delivery of goods for the purpose of taking Xerox and returning the goods back. Gratuitous. Because the bailee is not receiving any remuneration, Baylor is also not getting any benefit. Now, sometimes there could be exclusive benefit of Baylor also. For example, my car, there is some problem with it. My friend knows how to repair the car. He knows how to handle it. So he says, Shrikant, leave it in my garage. I'll have a look at it and return it back to you. So, bailment, car is a movable goods. I have given delivery of possession, purpose to rectify the small defect and give it back to me. No benefit for the bail, no remuneration for the bailee. Exclusive benefit of Baylor. My benefit, my car is getting repaired and coming back. So, these are all examples of gratuitous bailment. Clear? Now, non-gratuitous bailment is bailment for, okay, thank Prabhas Jain for putting up the definition of goods in the thing. Thank you, sir. My memory only, I told you have taken from your memory means you are really great. Goods means movable property other than actionable. I think of all kinds is there in the definition. No. Goods means movable property of all kinds other than actionable claims. Means suit filed. See, a suit filed by me against a person is a valuable property. Tomorrow I can assign that suit to somebody else. Okay, so that, but it's not goods. And money in circulation, like currency notes are not. It includes stock and shares, growing crops, growing crops are included, things attached to or forming part of the land, which are agreed to be severed before the sale. Beautiful, thank you, sir. Yeah. Now, Bandh Reddy mentions tailoring. Classic example of non-gratuitous. No, you do deserve a break, Pooja, but let's come to a conclusion and then I'll give. Okay. This break thing, I'm always unhappy when people ask for a break. Let me be the judge when the break has to come. If you want a break, take it. No problem. How do I know if you're taking a break or not? Yeah. I don't know how you contact the tech team. I've already told you if there is a lagging, etc., the tech support team only has to tell me. You check out how it is done. Seriously, I'm not aware of the procedures. I'm only the faculty coming and teaching. If everything goes well, I'm happy. If there is a problem in the technology side, I don't know what to do. Okay. Coming to the thank you, Prabhas, for giving us the definition, and thank you for pointing out that crops, grass, and things attached to a forming part of the land agreed to be severed before the sale or movable goods. Okay, thank you. More about it when we come to General Clauses Act. Okay. Now, a classic example of non-gratuitous bailment is tailoring, where goods are given for tailoring. See, I purchase material. For example, I go to Raymond. I purchase a suiting material from Raymond. Okay, Raymond showroom. Once I purchase it, I become the owner of the goods, right? Then immediately I give it to the tailor in the same shop. I go to the tailoring section and I give it to them. Sometimes I don't even give. The bill is cut. I pay immediately. The suiting goes to the tailor who measures me and says, come for it. Now, it is a classic example of non-gratuitous bailment for hire, where there is a benefit for the bailor and the bailee. It's a pure contract where idea is my goods are delivered, possession is given to the tailor for the purpose of stitching a suit. So benefit for me is I get a fully made, beautifully cut suit. Benefit for him, he charges an unnecessarily monstrous amount to me, which I have to pay for collecting the suit. Okay, so this is one example. Okay, ladies here can give similar example for salwar. And I don't know, most tailors, especially ladies tailors, they do some. Every time tug of war between my wife and tailor, because exactly 1 month before my wife will give the material, but they will not stitch, and they keep on delaying tomorrow, day after. My wife will be sitting in tension whether she will get that for wearing, because already the saree would have been taken and the matching blouse would not come. This fellow will, and last minute the tailor will say something. Yo, those are, and at that time I can't even go near my wife because she'll be, don't even talk to me now. I'm not in the mood to give you coffee, tea. You go prepare it yourself. I'm more worried about important things in life. When will I get my matching blouse for my sister's daughter's marriage? Okay, so such important things in life are more important than anything else. And I go by what Pooja says. We'll have a break for 5 minutes. Time is now by my clock 8:37. Let us say 8:35. Whatever. 5 minutes ka break. 5 minutes break. Sir, 5 minutes break. Ram, 5 minutes break. Sir, is there any lagging? So what to do? Welcome back from a very short break. Okay. And I hope it was. Don't we deserve a small break at least, sir? You deserve much, much more than that, madam. You deserve to become a chartered accountant. You deserve to be very successful in your life. But for that, you should concentrate on the class. Okay. If you want great things to happen later in your life, you should forget the small things in the short term. This is my humble suggestion. Not that Pooja PS is one of my very, very good students. I have the highest regard for her. So with blessings, I'm telling you, you deserve much, much more. You deserve to become a member, to be a very successful chartered accountant, I'm sure, etc., etc. But the point is, for doing that, small things we have to ignore. Okay? Unless the body is controlled and the mind is controlled, you cannot attain great things. Am I correct? Yoga is nothing but controlling the body and control more than the body, controlling the mind. So that is yoga. If yoga karmasu kaushalam. Yoga is perfection in action. Yoga karmasu kaushalam. Samatvam yoga uchyate. In both, in the second chapter, Bhagavan says both. Yoga karmasu kaushalam. Arjun, he says, yoga is excellence in action. But he also says, samatvam yoga uchyate. You should be able to balance the body's needs as against your aspirations. So I'm giving this as a general suggestion, not in any way commenting about what Pooja said. As a teacher, okay, she puts Guru Bhyo Namah, Shri Guru Bhyo Namah. So Guru, I'm telling this. Control your body. Take charge of your mind. Don't allow the mind to disturb you. When you have to concentrate on the subject, don't let the mind disturb you and say, I want a coffee, I want this, I want that. When the mind is disturbing you, how you will study? So in a way, becoming a chartered accountant is yoga. You should be able to totally concentrate and focus on what you're doing. And automatically you'll find successes there. So a humble suggestion to you, not to be taken otherwise. And Swati will get angry and say, don't tell useless things and all. Sorry. But generally, I'm telling this. Okay. Continuing with the topic, gratuitous bailment and non-gratuitous bailment are very important because the rights and more importantly, the duties of Baylor will be different in different cases. Duties of Bailey will be different in different cases. So, non-gratuitous bailment, it is necessary that both Baylor and Bailey are not necessary. Because in non-gratuitous bailment, there should be some consideration flowing. Okay. That's how it is. Okay. But even see one thing. Let me put it very clearly. Yeah, there should be some benefit. It's a very interesting question, Ankurji. And making me think. See, there should be some benefit. It may not be directly to the Baylor. I'll give a simple example. I go to Raymond's with my son. Okay. We buy suiting material. It's my gift to him for his birthday. New suit. So he takes the measurement. The goods belong to me because I paid for it. I give it to the Raymond guy with instruction to him telling him, please stitch it properly for my son and give it to him. So here the benefit in a way is going to my son, but still there is a benefit. So there should be some benefit. Then it is non-gratuitous. Okay, where the Bailey is not receiving any remuneration, it is gratuitous. Then it can be for the benefit of Baylor or for the Bailey. Okay. Yeah, there should be some benefit for Baylor and Bailey. If you can think of some example where there is no benefit for, the minute there is no benefit for Bailey is not receiving any remuneration, straight away gratuitous. Baylor also should get a benefit from the bailment, then only it's non-gratuitous. Otherwise, suppose there is no benefit for the Bailey, but there is some benefit for the Baylor, then it will be gratuitous. If there is no benefit for the Bailey, okay, or no remuneration or anything, then it is gratuitous. Okay, that is the basic criteria. Once the bailment is there, there will be some benefit for the Baylor, right? Otherwise, why would he bail the goods? Yeah. Now I have done that. I hope the connectivity is better now. And Pooja, don't worry. I hope the answer given by me was not meant to you only. It was a general thought. I thought I could share with students on this. Yes. Controlling the mind is very, very important. In fact, if somebody asks me, sir, for CA exam, what is more important? Is it knowledge? Is it hard work? I will say it is ability to control your mind. The more a person controls the mind, the more the calm they become, the better and better the chances that they will clear the exam in first attempt, rank, etc. The more they are confused, the more they are, then whatever knowledge they possess, no use, because all that knowledge will get jumbled up in the exam hall and complexly they will confuse themselves, everybody, and come out. Okay, here are some examples of bailment. Delivery of goods by one person to another to be held for the bailor's use. Okay. Examples are there. Goods given to a friend for his own use without any charge. I gave so many examples. Gratuitous bailment. Lending a book without any charge. Gratuitous bailment. Hiring of goods. Non-gratuitous. You are hiring a motor car. Non-gratuitous. Because you are going to pay for the hire. The bailee is going to get the benefit of the goods. There is a benefit for bailee. Okay. And there is a payment. Okay. Delivering goods to a lender to serve as security for a loan. Already mentioned to you. This is a special type of non-gratuitous bailment. It's called pledge, where goods are delivered. Delivery of goods as a security for a loan is one example. Delivering goods for repair with or without remuneration. Okay. Non-gratuitous. Delivering goods for carriage, non-gratuitous. Okay. See, strictly speaking, if it is delivered for repair with remuneration, then non-gratuitous. But without remuneration to the bailee, then it is gratuitous. Okay. Where I am giving it for repair, there is no remuneration for the bailee, then it is gratuitous. If there is a remuneration for the bailee, it is non-gratuitous. So 149, the delivery to the bailee may be made by either doing anything which has the effect of putting the goods in the possession of the intended bailee or of any person authorized to hold them. Possession is an important aspect in bailment. There can be no delivery without transfer of possession. But possession may be physical or symbolic or constructive. For example, you go to take sale of goods, example, simple. You are buying a car. Now at the time when you buy the car will be parked in the shed. When the car dealer will come to you and he will hand over the key. Once the key is handed over to you, the possession is with you. It's not as if he can take the car and give it in your hand. Instead, he gives you the key, which entitles you to use the car. So it is a symbolic or constructive possession. There is a constructive delivery of goods. Deemed delivery when the key is given to you. Car key is given to you. Or suppose the goods are in some godown and there is a lorry receipt which will entitle you to go and collect it. Or then the receipt, when you get it, it is a symbolic delivery. So possession can be physical or symbolic. When there is a symbolic delivery of possession also, there is a bailment. And goods may be delivered to somebody who is authorized by me. When goods are delivered to a servant here is not a negative term. It means employee. It is valid delivery and make the master a bailee, the employer a bailee. Okay. So instead of giving it to you, I give it to your employee who takes it on your behalf. Then you are the bailee, I am the bailor. See, this example is nice. You have to just... A lady employed a goldsmith to melt her old jewelry and make new jewels. Every evening she would lock up the partly finished jewelry, put them in a box in a room in the goldsmith's house. She would lock the room and retain the key. Suspicious lady, Visalakshi. Very suspicious lady. She doesn't trust the goldsmith. So she gives it to him, but every evening she would lock up the partly finished jewelry in a box in a room in the goldsmith's house. Now, is the goldsmith liable as a bailee? No, Because, of course, it was in his house, but did he have possession? No, because by keeping the key for the room with her, she retained symbolic possession. Who was in possession? The lady was in possession. The goldsmith had no access to the jewelry during the night. The goods were stolen one night. Who is now responsible? Sorry, the lady only. Because he was not in possession of the goods at the time of theft. So don't think possession means only physical possession. This is a very interesting case, Kaliya Perumal versus Visalakshi, which makes you understand the importance of physical possession or symbolic possession. Suppose instead of taking the key with her, she had locked the room and given the key to the goldsmith. Then he has got symbolic possession. It's quite possible that he could have entered the room and done something. So, since the key was not with him, he did not have possession of the goods. There was no bailment. Important ingredient of bailment: delivery of goods, transfer of possession. So, in the problem, be careful. If possession is not transferred, there is no bailment. Even though there may be some degree of geographical connectivity between the bailee and the goods, he should have access. Okay. I gave one example of Baylor benefit. See, gratuitous bailment, benefit of the Baylor. I am the Baylor. I give the car to my friend who is an expert in cars. So he does some work for me on that car to make it more faster. He makes an adjustment in the carburetor or whatever to make it run faster. I give it to him. So the car is in possession for 2 days. I am the Baylor, he is the bailee. He is doing it free. So no benefit to him. It is gratuitous. But I get the benefit because the car becomes faster or better. Got it? So exclusive. Wonderful. Thank you, Pooja, for confirming it. Now, here's an example of possession versus custody. So you can say in Kaliya Perumal versus Visalakshi, the goldsmith had custody but not possession. Simple. Vishal parks his car at a parking lot, locks it and keeps the keys with himself. This is not a case of bailment because the operator of the parking lot has custody of Vishal's car but not possession. By locking the car and keeping the keys with himself, Vishal has effectively retained symbolic possession of the car. Right? Of course, there's a lot of nuances there. This example is given only to help you understand custody, possession versus custody, right? Possession versus custody. But suppose you leave it in a parking lot, okay? Parking lot. There are other issues also here, right? That's why when you get that parking ticket, now please examine it. They very clearly put we are only giving you space to park. We are not liable for any loss. Okay, they will exclude their liability. Generally, they will put it expressly. In fact, many times, my clients come to me for legal advice also. In these cases, I clearly told them to exclude. One case, I told them to exclude the liability. They were a retail chain. They had a parking lot behind. So they're allowing the customers to park. I told them, boss, you take parking charges. But very clearly tell them that what you're doing is only giving them space. You are not liable for loss. Put it there and give it to them. So if something happens, you are liable. Now, we come to duties of Baylor. Baylor has duties. Bailee also has duties. First duty of Baylor, to disclose any fault in the goods bailed. The condition for the liability of the Baylor are, the Baylor should have knowledge of the defect and the bailee should not be aware. The defect in the goods must be such as exposes the bailee to extraordinary risks or materially interferes with the use of goods. So, this is common for both gratuitous and non-gratuitous. If the Baylor has knowledge of the defect, the bailee is not aware of it, the defects in the goods must be such as to expose the bailee to extraordinary risks or materially interferes with the use of goods, then both gratuitous and non-gratuitous, it is the duty of the Baylor to disclose. Failure to disclose, Baylor is liable. If the goods are bailed for hire, that is non-gratuitous bailment, then that's why I said be careful, non-gratuitous, gratuitous. the Baylor is responsible for damage, whether he was aware or not of the existence of the faults. Even if he is not aware of the defect, he is liable. This is for non-gratuitous bailment. Also, it is bailor's duty to supply the goods or deliver the goods fit for the purpose for which it was hired. So, this is there only for non-gratuitous bailment. Gratuitous bailment, if I know about it, I should tell you. Even I don't know about it and something happens, I'm not liable. But if I'm hiring it, giving it for hire, then even if I'm not aware, I'm liable if there's anything. So A lends a horse which he knows to be vicious, means bad or not a good-tempered horse, evil-tempered horse. He does not disclose the fact. He knows that it is vicious. The horse runs away. B is thrown and injured. A is responsible. Because why? Even though it's gratuitous, A is aware of it. B is not aware. A should disclose. He has not disclosed. You should at least told him it's a vicious horse. Be careful. It will run away. If you can't control it, tell me, like that. He has not told it. So B is thrown and injured. A is responsible. Okay. There's an example given by Macaulay himself, which is why you will find a lot of horses and carriages are there. Because that was before the automobiles came. 1872 Act, you will not find cars and other things. Yeah, A hires a carriage belonging to B. The carriage is unsafe, though B is not aware of it and A is injured. Hires a carriage. So now whether B is aware or not, it is his duty to compensate for the injury. Similar example, Mr. Vikram Adekar hired a taxi from Mrs. Bapat and Sons for the purpose of going to Pune from Mumbai together with his wife. During the journey, this together with his wife is very dangerous. Huh? Adekar did not hire his wife. He only hired the taxi for going to Pune with his wife. Okay. During the journey, a bearing in the clutch assembly broke. As a result of it, there was a minor accident on the highway. See, when you're driving the car at say 80 or 90 and there's one of the bearing breaks, the clutch assembly will sort of crumble and car is running, anything can happen. Because what happened that the tires will not move, the wheels will not move. Suddenly the vehicle, but whereas the speed will already be there, the vehicle start moving uncontrolled. Suppose a lorry is coming or something, it's huge. So very dangerous, the clutch assembly breaking. I had one experience of the clutch assembly breaking in high speed. Luckily nobody on the highway and I could turn the car and come out of the main highway. But very dangerous. And so these people were injured. So Bapat and Sons are liable to pay damages to Adekar. Why? Because it is non-gratuitous hiring. Whether Bapat and Sons were aware of the defect or not, they are liable to the bailee, Mr. Vikram Adekar. Got it? Now, in case of gratuitous bailment, the bailor shall repay to the bailee necessary expenses as well as any extraordinary expenses incurred by him. Okay? Where it's a gratuitous bailment. So, any necessary expenses as well as extraordinary expenses. Right? Both necessary and provided it's gratuitous. This is applicable where goods are to be kept or carried or to have work done upon them. For example, gratuitous bailment, I give my car to my friend for doing some small work on it. I'm not going to pay him anything. It's gratuitous. But still, okay, as a bailor, I have to pay him the petrol fee cost as well as any expenses that he might incur. I have to compensate. 158 makes it express the liability of the bailor to compensate the bailee for any necessary expenses as well as extraordinary expenses. However, in case of non-gratuitous bailment, the bailor is liable to pay only the extraordinary expenses. Bailment for hire, then necessary expenses are to be borne by the bailee. Petrol, all that has to be borne by him. Whereas, if anything goes wrong, extraordinary expenses have to be borne by the bailor. Take our earlier example of Mr. Adekar. Same case, on the highway, clutch assembly breaks. Luckily, there was no accident. But the car is stranded on the middle of the road here, and Adekar has to reach Pune. So, he spends 10,000 rupees to have the clutch assembly repaired locally, and then he proceeds to Pune. Now, Bailment and Sons have to reimburse him the amount as it is an extraordinary expense. But necessary expenses like fuel, toll, etc. would have to be borne by Mr. Adekar. If this does not happen, normally Adekar goes from Mumbai to Pune. Okay, petrol and toll he has to pay. But if on the way this sort of thing happens, then Baylor is liable to compensate him for extraordinary expenses. So kindly make the distinction between gratuitous and non-gratuitous, because the rules for Baylor, duties of Baylor, different for gratuitous and non-gratuitous. Okay, please make that distinction. Now, duty to indemnify bailee for premature termination. If the Baylor does not disclose, I think it's clear now. If it is gratuitous, Baylor is not available, does not disclose, liable. If gratuitous, Baylor himself is not aware, does not disclose, no liability. Non-gratuitous, whether Baylor is aware or not, he is liable. Whether he discloses or not, whether aware or not, he is liable. Clear? This slide is the key to the question that you have asked. Once I share it, you go through it if you want again. In Prabhas, again, that valet parking thing possibly was a dangerous example I gave, but then let's see what he has to ask. After all, practical. Sir, in valet parking, key is retained by the person who parks the car. So in that case, person who parks would be liable. Absolutely correct. That's the example of Vishal. Vishal parks it, keeps the key. So he is liable. There is no bailment in it. There is no bailment, right? There's no bailment. One more important point, please understand. All these are general rules. The bailor and bailee may have something specifically mentioned in their contract that such things they are bound. Only if it is silent, then only these rules will apply. If there is an express contract, for example, the parking lot owner expressly agrees to take care of the car, then he is liable because he is agreed to take care. So he has to take reasonable care. Similarly, there is no exclusion of liability. The key is handed out to the valet. Oh, you mean here, Prabhas Jain? That is my example. Correct. Prabhas, I'm giving your example only. I give my car to I'll give a classic real example. Regularly, I go for Rotary meetings in Chennai or elsewhere, invariably star hotels. Sometimes I self-drive, rarely I self-drive, but sometimes I self-drive, in which case I get down from the car and hand over the key to the valet who has to park it. Now, situation totally changed. Prabhas, you are absolutely correct. Valet has taken my key now. Now the hotel people are responsible, not valet. Valet is the employee. Please come. Valet is not responsible. Valet is not. Valet is an employee. Vicariously, the employer. Who is the employer? It is the star hotel. They are liable. But check out. Next time you park a car in a star hotel, check out that small tag that they give you. On the reverse side, they would have excluded liability, or they would have said, for any loss of car, we are liable only up to 10,000 rupees. Or they would have restricted the liability. Check it out. Or forget loss of car. Somebody could have come and dashed against this car and gone. So your car will be dented. So you go to the star hotel and say, you can argue, Prabhas, you are right. You can say, I am a bailor, you are a bailee. You took my car. I gave the car to you. So you had possession of the car. Now it is damaged. You pay me my complete cost of thing. They will say, sir, please look at your tag. Look at the tag. Liability restricted to 10,000. Sorry, they will pay 10,000, go. Balance, if the repair is going to cost more than that, it is your problem. So that's what I'm saying. Be careful. But as a principle, Prabhas ji, you are right. When the valet parking is there and the valet takes the key, the hotel becomes the bailee. You are the bailor. Liability is there. 100% liability is there. They have to pay. Okay? No doubt. Right, sir? This is coming under a different clause. To take reasonable care of the goods built. Not in this case. Not in this case. We'll revisit this when we come to to take reasonable care. The bailie's duty to take reasonable care of the goods paid. Okay, premature termination means what? I lend the book to you for 1 month. Now, 15 days later, I call you and say, I need the book, give it back. It's called premature termination. Where the goods are bailed gratuitously, the lender of a thing for use may at any time require its return, even though he lent it for a specified term or purpose. Please understand, this is applicable only to gratuitous bailment. If premature termination is possible in gratuitous, lent gratuitously, I need it, yeah, please give it back. Sometimes it happens. I have some really important reference books. Somebody wants it, I give them for, said, give it back next month, yeah, no problem. But suddenly I find I need to refer to something for an essay that I'm writing. Therefore, immediately I call him, I need to go back, send it. He can't say, this is a contract of bailment, Mr. Srikanta, you are Baylor, I am Bailey. If you prematurely terminate the contract, you have to compensate me. I'll say, bullshit, this is only gratuitous bailment, give the book back. Okay? But if on the faith of such loan made for a specified time, the borrower, means here the borrower of the goods, not money, borrower has acted in such a manner that the return of the thing lent before the time agreed upon, he incur loss exceeding the benefit actually derived by him from the loan. Then, suppose, I'll give another example. Tools. Okay. I'm a plumber. You are also a plumber. I have taken on an important contract. One of the important pump, one of the important suction pump, mine is repair. So you are my good friend. I come to you and I say, hey, I need to conduct the repair of the property, ma. I've got this contract, 10,000 rupees I'll get, and I need to, do it. Now, kindly give that suction pump. Yeah, even I say I don't need it, take it. Next week you have to return it. So I take it and I start the work. I've already fitted the pump. Things are going on. Now you come to me, suddenly I say, give my pump back. Now, hey boss, I'm good. If I take it out now, I'll have to double cost, yeah. I have to hire another pump. I don't mind doing it. Not only that, all that, I have to clean up the place. It's going to take a lot of time. And it's going to take a lot of money. Much more than I'm getting only 10,000. If you now take this pump away from me, I will lose 25,000, yeah. So in those cases, exception. I've given a very practical example. Please understand. Both gratuitous only. Though I'm using it for business, you gave it to me without any, consideration, gratuitously, as a friend. Suddenly you come and say, you're taking it back, then, sorry. In these cases, where the bailor had lent the goods gratuitously and decides to terminate, then the bailor must compensate the bailee for the loss or damage suffered. Are you able to see the distinction? I have lent it. You have not done anything so as to incur any loss. I come and ask it back. You have to give it back. But you have done something by which, suppose I take it back from you, you will lose money. Then your loss I have to compensate. If I am prematurely terminating, right? So premature termination is possible only for gratuitous. Because non-gratuitous, there is a contract for hire. So when I took the car or whatever it is I took on hire, you gave it to me for 1 month. You charged me for 1 month. You can't come and take it back in the middle. If you do that, it's a breach of contract. And as such, you are liable under the General Contract Act itself for breach of contract. Sir, I use words like you, me, you to give example and to help you relate. So don't think when I say you, I mean you. But see this, you have to be very careful about gratuitous and non-gratuitous. Where the bailor's title to the goods is defective. That means the goods do not belong to the bailor. Now, he lends it to the bailee. See, how is beautiful, huh? The goods is not his, he gives it to the bailee. Now the bailee is using it. During that time, the true owner comes and does something by which the bailee is losing money because the bailor was not entitled to make the bailment or to receive the goods back or to give directions respecting them. Wherever there is a defective title in goods, he is not the true owner, then there is a bailment. The bailee is suffering losses. Then the bailor has to indemnify the bailey. Indemnify, make good the loss. To indemnify means to make good any loss which I may incur. So, where the title of the goods is different. It is the duty of the bailor to receive back the goods when the bailey returns them. Please understand. This is irrespective of gratuitous and non-gratuitous. Please note, common. D and D are common. Gratuitous, non-gratuitous. If you have no title to the goods and you give it to me on a bailment, and I am sued by the true owner, or I'm suffering loss on account of you not being the owner, you have to indemnify me. Okay. You have to indemnify me. Also, let us give an example. You are having a huge machinery. You are lending it to me, hiring it to me. I'm taking it on hire. I'm using it. Now I want to return it back to you. When I bring the goods back to you, you tell me, no, I can't take it back. You keep it and give it back. Now, for every day I keep it, I have to pay rent. Therefore, that expenses incurred by me, you have to compensate. If the bailor refuses to take delivery of goods when it is offered at the proper time, the bailey can claim compensation for all necessary expenses incurred for the safe custody. Means, you can't cook up some extraordinary things. Whatever is necessary, for example, rent, any protection sheeting that you may put to protect it. Maybe it's a monsoon season. I'm returning to you. You are saying you keep it. I have to keep it in an open yard. So I put tarpaulin sheets to cover it, to protect it. All that I can claim it back from you. You are liable to pay me, irrespective of gratuitous, non-gratuitous. Friends, I'm making my point very carefully. Now, to take reasonable care of the goods. This is where, Prabhas, your example will come. In all cases of bailment, the bailey is bound to take as much care of the goods bailed to him as a man of ordinary prudence would, under similar circumstances, take of his own goods of the same bulk, quality, and value as the goods bailed. So, Prabhas Jain's example is very interesting. Vikshak's example was he took the key with him. Prabhas's example is he gives it for valet parking. The key is taken from him by the valet. Now, who is liable? The hotel is liable, not the valet. Oh, he's a poor fellow working for some hourly payment of 20 rupees per hour or 50 rupees per hour. Poor fellow. 250 per evening. Poor fellow. That fellow is not liable. He is the employee now. He is liable to, the employer is liable to the bailor. Please understand, as between the employee and the employer, there may be some adjustment. Later on, when you come to agency, you will understand this. Employee is an agent of the employer. So, as between the principal and employer, there may be. But with regard to third parties, whatever act is done by the agent, the principal is liable. So, the hotel chain is liable, right? No problem. But this is coming under this category. You take the car from me and put it in the garage or in the basement parking, right? Boss, you have to take care of the car, yeah? You can't simply go and dash it, allow other people to dash it and all. So that ordinary prudence would, under similar circumstances, take off his own goods. Suppose you park the car in an angle, almost in the place where the turning is there. Another stupid guy comes and turns and he scratches my Audi or my Benz and goes, boss, you are liable. Unless, be careful. This is where you have to be very careful. Suppose while taking the car from you, the valet will give you a small tag token. Just see the reverse side, you will find the hotel management is not responsible, or they can't say not responsible. What they will say is they are responsible to the extent of, they will restrict their liability. In the minute you take the tag and put it in your pocket, impliedly you are agreeing. If you don't see it, that's not my problem. Okay. So got it? So if in case there is a loss, then the bailey is not responsible for the loss, destruction, or deterioration of the thing bailed if he has taken the amount of care described above. Please understand, a man of ordinary prudence would, under similar circumstances, take off his own goods. I'm going to give a very, very practical example. I'm taking Prabhas Jain's story further. The valet took the car, parked it properly in the slot. There was absolutely there was no damage. The car was not sticking out. It was properly parked. Some drunken idiot, while taking his car after the party, in a drunken state, he comes straight and hits my car in the back. Now is the hotel responsible? No, because the car was parked normally. Yeah. It was not parked in the middle of the ramp or somewhere where it is endangered. I have taken car. Some drunken idiot comes and hits it. I'm not. Who is responsible? Locate the owner of the car and file suit against him. Because he is damaged your car. He is liable to you. Okay, we are not liable. Okay, got it? So I'm giving you some examples. In fact, Prabhas Jain gave me one example. From that, I'm spinning a whole series of examples to help you understand. But provided you should take reasonable care. See, this is reasonable care, ordinary prudence. These are all difficult words. In fact, when you come to general classes, again, we'll talk about good faith. Acts done in good faith. Okay, very difficult. Good faith it's a circumstances of the case. Every case has to be seen separately. That is where evidence comes into play. All that is there. For example, cameras will be fixed in the basement everywhere. You have to see the exact camera, that particular strip from the security camera, what happened, how it was parked by the valet, how everything was safe. Then this drunken idiot comes and hits it. Then whose responsibility? Not the bailee, because the bailee has taken reasonable care. The same care that he would take of man of ordinary prudence would, under similar circumstances, take off his own goods. Words highlighted by me in my slides are important and may be remembered by heart. Exception where there is a special contract regarding care of goods. Suppose the contract restricts the liability of the bailee, that will be applicable. That is what I gave you. The example where the hotel says, whatever damage due to, even if it is due to our fault, if it is not due to my fault, I have taken ordinary prudence, then I am not liable at all. Suppose it is the fault of my valet, the parker did something. Suppose at the time of parking, the valet did not know how to turn the car, he dashed. Definitely there is a loss. But the hotel chain says, I am liable only for 10,000 rupees. Their liability is restricted by a special contract regarding care of goods. Okay. Friends, I am not hearing anything from you for a long time. So hopefully things are clear. Have you understood? Duties of bailee. I don't think I can complete this today. Next class I will complete. Let us see. Not to make inconsistent use of goods. See, the goods are being bailed for a purpose. Your use of the goods should be consistent with the conditions of bailment. The minute you make use of the goods which is not consistent with the conditions of the bailment, the contract is voidable at the option of the bailer. Voidable. It doesn't become void. Why? Suppose I'm hiring the car to you. You are using it for some illegal purpose. Sorry. A is hiring the car to B in good faith for legal purpose. It is being used for illegal purpose. The contract is voidable at the option of the bailer. He can say, I am not liable. But he can also say, you pay me my dues. He can sue it is voidable. So to the extent that he is owed money, he can sue. Okay. Further, if the bailee makes any use of the goods which is not according to the conditions of bailment, he is liable to make compensation to the bailer for any damage arising. So can you see contract of indemnity is built into by bailment, where there's an inconsistent use, there's a contract to compensate the bailer for any damage arising to the goods from or during such use. We come back to the Adekar family, wonderful family, Vijay Adekar. See, this family, Vikram, Vijay and all, I created a story about them. When I was preparing these slides, I was in Coimbatore during the pandemic. When, this entire family, I came up. One of my case studies in final will give the story of Vikram Adekar. Okay. Now Vikram has a son called Vijay. He has two sons, Vijay and Vimal, for your information. So Vijay Adekar, one of the sons, Vimal is a good boy. Vijay, as you will see, is a bad boy. Okay. So Vijay Adekar hires a motorcycle from Bapat, and poor fellows, these Bapat and sons, regularly hiring vehicles to Vikramji. So they give the motorbike to Vijay for traveling with his friends, within quotes, from Pune to Panchgani. I don't know if those of you who are from that part of the world, like Somesh and all, will know Panchgani, which is a little bit before Mahabaleshwar. As you go to Mahabaleshwar from Pune, a little bit before that is Panchgani, nice hill station in Maharashtra. So these guys are driving down, a group of friends within quotes, are driving down to Panchgani. Our friend has hired a motorcycle from Bapat. On the way, you can imagine what will happen. All of them have motorbikes, and our friend Vijay Adekar does wheelies and other types of stunt riding to impress some of his obviously lady friends. Nothing wrong if he does it properly. Fellow has an accident and the motorbike is damaged. Classic example. The contract is voidable at the option of Bapat and Sons. Their obligation under the contract is they are not liable for any damages. Now, anything happens to the motorcycle, Vijay Adekar shall compensate Bapat for the loss of motorcycle. Any other loss or damage that they may incur. Obviously, Vijay will not do it. Huh? Poor fellow Vikram, his father will have to bear the loss caused by Mr. Vijay. Okay. Right. Got it? Not to mix goods. This mixing goods is another important thing. See, this is classically there in old trading situations. What will happen is, I may be coming to maybe there's an important bazaar happening in Surat. Okay. I am a merchant from Baroda. So what I do is, you are my, agent or my friend in Surat. I tell you, boss, there's an important thing coming up here. That particular item, I want it. The price will be very good. I'll send the money, I'll pay the money to you, don't worry, but you buy the goods and keep it for me. So that fellow buys the goods. Now, on my behalf, strictly the goods are mine, but possession is with him. So Bailey, so he has got the goods, he has purchased and kept. Now, he should see to it that my goods with him are not mixed with the other goods of his own without my consent. If I give the consent, it is okay. Suppose during the conversation, you tell, boss, I am also going to buy same type of chilies, same quality chili, I am also going to buy, boss. Then you do one thing, you buy 500 kilos, I will take 200 from you. So now the clear understanding is they can be mixed. But suppose I tell very clearly, boss, buy first quality chili. Oh, first quality, boss, that's a little costly. No problem, you buy it and keep it for me. I've got a customer, keep it for me separately. Now, the first quality chili cannot be mixed with the normal chili. You got it? Which the best. So, now comes the problem. Bailey has mixed the goods. Now, separation is the whole point. Suppose the mixing is happening with the Baylor's consent. As I already gave an example, 500 kilos bought. I am not worried. It's okay because both are best quality, keep it. Now the Baylor and Bailey shall have an interest in proportion to their respective shares in the mixture thus produced. So the whole 500 kilograms, I have 200, you have 300. That's all. When we sell 200 kilo price, you give it to me, even no problem. Okay. See, remember, Macaulay designed the Contract Act for businessmen like you and me, for traders, for people who are running businesses. The idea was not to put restrictions, but to facilitate business and give clarity to business dealing so that courts will not have to waste their time. Okay. That is how Macaulay wrote his law. Because the British who were there, they were all basically traders. So for them, business was more important. And these laws were meant to be, which is why the Contract Act rarely has been amended. Because these are all commonsensical rules here. I have given my consent for mixing. Now it's a mixture. Out of that, what I'm getting, I have proportion only. How I can separate? Now, without the bailor's consent, the goods are mixed. Now, next question you have to ask. Can the goods be separated? So, if it is a discrete goods which can be counted, okay, in items and identified separately, then separation is possible. Where the goods can be separated. For example, I am asking you to buy top quality polyester material, say 50 bales. You are buying same polyester material, slightly lower quantity, you put all the bales together. Now, clearly the top quality polyester can be separated. So when it can be separated, then the top quality continues to be the bailor's property. The separation cost has to be borne by you. And if there is any damage, that cost has to be borne by you, means by the bailee. Suppose it is impossible to separate the goods bailed. Take my example of chili only. Low quality chili, high quality chili. Both are red in color. You mixed it. Now it's going to be impossible to separate the chili. Impossible to separate. Then you have to compensate me. If you have sold the entire thing at a lower price, you have to pay me for the higher price. Got it? Now, A bales 100 bales of cotton marked with a particular mark to B. B, without A's consent, mixes the 100 bales with other bales of his own, bearing a different mark. So the mark is different, right? No problem. Now we can separate it now. But whatever is the cost incurred for separation and any other damage which could occur due to the activity will have to be, B has to pay to A, bear the cost. Now A bales a barrel of Cape flour worth rupees 45 to B. See, again a classic example of, British India. See, the Cape is South Africa. The Cape is Johannesburg, South Africa. So, see, that's the range of the British dominions. Okay, they were there in Africa, they were there in Asia, they were there in South America, some parts, America, some parts, and in Europe, of course, and England. Okay, so this guy has a Cape flour worth 45 rupees. He bales it. Now, B has got his own country flour, local flour. Flour means maavu. What is that flour? I don't know what you say in Hindi. It's ground cereals, wheat or rice. When it is ground, made into powder, that's called flour. Okay, you have na wheat flour, right? In Tamil we call it maavu. I don't know what you call it in Hindi. Okay, so when cereals are ground, rice or wheat or millet is ground and made into powder, it is called flour. It is used in cooking. If you want to make chapati, you have to have wheat flour. So good quality flour is mixed with country flour, local flour, and it's only worth 25 rupees. So now the whole mixture is not impossible to segregate. Okay, and that too in British before independence. Today maybe some chemical process is there by which even now it's difficult to segregate. In fact, the cost of separation will be prohibitive, maybe costlier than the price of the goods itself. So now what happens? A has lost. So to that extent he has to. For example, that mixture, somebody may buy it only for 25 rupees because they might say, I can't pay for the entire amount. You see, it's all mixed, yeah. It's not worth 45. Maybe he'll get 30 rupees. Now, let us say that the entire set of barrels is sold for 30 rupees. Now, A has a profit, yeah, but B has a loss. 45 minus 30, 15. That loss should be compensated by B to A because he should have got 45 for his flour, whereas he got only 30. That 15 rupees is a loss. That loss should be compensated by B. Okay? Quite interesting topic, right? Atta. Sorry, I didn't. Okay, that's atta. Okay, you call it atta, is it? I don't know that. I know about atta, but I never thought atta was food. Agreed. Atta, correct. Okay, here's an example from the Institute Ka question paper. Amar bailed 50 kg of high quality sugar to Srijit, who owned a kirana shop, promising to give rupees 200 at the time of taking back. So his non-gratuitous bailment, where Srijit will be paid 200. The bailee will be paid 200 for keeping the sugar. Now our friend Srijit's employee, not aware that this is not Srijit's, it's Amar, he mixed it with 50 kg of sugar belonging to Amar. Okay, high quality sugar was mixed with normal sugar by the employee. Important principle of law, employee is an agent. Whatever the employee does, the employer is liable. So even if the employee does, Srijit is liable. Now what this fellow does, he packages it. The employee in good, the employee is also a good fellow. He was doing his job. Oh, quickly he mixed it and packed it for sale. When Srijit was aware. Later on, Amar comes and says, give my goods. Now, by the time the price of this specific quality of sugar has tripled 3 times. So now the bailor must compensate the bailee. Sorry, the bailor is entitled to be compensated. Whatever the loss, what is his loss? Suppose he had sold the high quality sugar today, what will be the price? That has to be given to him by Srijit. Whatever price Srijit gets, that's his luck. What is the today's price? You have to give it to him. Because I told you to keep it here. When I come, I will sell it. You mixed it. Now you give me the price. That's all. Whatever I would get in the market, you pay me now. That's all. Oh, atta and maida. Okay, maida is very purified. I never take maida. Never eat maida. Maida is dangerous for health. Try to avoid maida. Wherever possible, however possible. Unless compelled, don't eat maida. Maida is dangerous. It's a very, very simple sugar. Does not give you any energy. Does not add any value. No protein. Nothing. And it ultimately adds to your weight. Okay. Thank you for increasing. I knew the words atta and maida, but I never knew that this is the same as mavu in Tamil. Anyway, good. But somehow I'm really, I don't like maida. Maida is a risky stuff. Anyway, now, duty to return the goods. Let's see the duties of bailee now. We are seeing duties of bailee. With your permission, I'll take another 5 minutes to finish the duties of bailee. Duty to return the goods bailed. There is a duty of bailee to return. Okay? That's obvious now. If there is a default and the goods are not returned, then bailee is liable to compensate the bailor for loss. Similarly, he has to return any accretion to the goods. Suppose, in the meantime, the goods have had some accretion, means increase. Then, but boss, normal goods cannot accrete. It's not miracle here. Where if I leave 100 kilograms of wheat in your godown, it cannot become 120. I'm a Jesus Christ or what? Some miracle is happening that it has increased. You know the famous miracle of the loaves of bread and fish. Jesus Christ could take the loaves and make them feed the multitude. Okay, but such miracles not going to happen in real life. Goods will not agree. But some examples could be, and the only example I have seen right from my BCom in 1985 is A leaves a cow in the custody of B. Cow has a calf. B is bound to deliver the calf as well as the cow. Okay, so in these cases only it will happen. Or sometimes this can happen only with organic living things. Inorganic things will not grow. Okay, they won't accrete. Value may go up sometimes. Accretion could be alcohol, when it is kept for a long time, matured, it grows in value. So sometimes there could be accretion in value, but not in quantity. Bailee must not set up a title adverse to that of the bailor. He must hold the goods on behalf and for the bailor. He cannot deny the title of the bailor. The bailee cannot say it belongs to me. He has to say it belongs to him. There's a famous movie of, in Tamil. Andhra might have seen the movie in Telugu. Point is, Rajinikanth will lend his coat or I think shirt to a comedian called Sendil. And as they are going along, he will tell, he is the guy who's going to get married. He is the groom, but the shirt is mine. So ultimately, you have to keep on confirming that the shirt does not belong to you. You cannot deny the title of the bailor. It's a very humorous scene. Rights of bailor. He can terminate the bailment. Okay, subject to the conditions where the goods are being used inconsistent with the conditions. If they are being properly used, you cannot terminate. Non-gratuitous bailment cannot be prematurely terminated. Gratuitous bailment can be prematurely terminated. But if in the meantime the bailee has incurred some cost, which is more than the amount he is going to gain from the bailment, then bailor has to compensate. Simple rule. Subject to that, you can terminate the bailment. Where it is inconsistent use is being made. When goods are when the goods are lent gratuitously, we already saw this. Okay? We already saw this, right? Bailor can sue the bailee for return. He can claim compensation for negligent use, unauthorized mixing, unauthorized use. He can file a suit for demand of the goods back, any accretion. Whatever duties of bailee automatically become the rights of the bailor for suit. Correct? the bailee can return the goods to any of the joint bailors. Just like co-sureties, joint bailors are when one property is commonly owned, then the co-owners will become co-bailors, joint bailors. Correct? Then in the absence of the contract to the contrary, A and B own a car jointly. They lend the car to C. At the time of lending, they don't tell anything. Then the car can be returned either to A or to B. Suppose at the time of lending, B says, don't return the car to me, I'm going abroad. Give it to A. Then where the bailor has no title to the goods and the bailee has in good faith delivered them back to him, then good any malignant, malafide intention, in good faith I came, I gave it back to you. I'm not aware that you are not owner. I give it back to you. Then the true owner cannot sue the bailee because bailee did everything in good faith. Suppose the true owner sues and the bailee has to pay some compensation. The bailee is entitled to be indemnified by the bailor for any loss incurred because the bailor was not entitled to make the bailment. In case the title of the goods is an issue, the bailee can apply to the court to decide the title. To the extent of deciding the title, he can apply to the court to prevent its delivery. This will happen when the amount involved is huge and the thing. Okay, then he can say. For example, link it with pledge, then you will understand. Jewelry does not belong to the pawner. It is pledged. I am the pawnee. Owner or not, I can file. Only then it will be relevant, this one. Right to claim compensation in case of faulty goods. Again, the reverse. Duty of bailor becomes the right of a bailee. Whatever was liability there for him, duty for him becomes his right. So you check out the duty, that is the right. Right to claim extraordinary expenses. Reverse. He is liable in the case of non-gratuitous. Liable for extraordinary expenses. Correct? In the case of gratuitous bailment, necessary expenses can also be claimed. Okay. Now we have come to a particular level where right of lien, etc. And I can't do this. Hopefully I will take it forward and we will discuss this in the next class. Right? Good. Any questions? Akash Neil comes out with that. All this confusion is when bailor knows that the goods are different because except for the difference in price, nothing else is agreed. That is the question asked in the exam is like that. What to do? No, but both are aware that the there is unfortunately not mentioned in the problem. You have to assume it that the 50 kg of sugar belonging to Amar was of lower quality. Okay, that's the point. Whatever it is, you have mixed it. Now you can't. I may accept not to take the mixed sugar. I might say my sugar was high quality sugar, you pay it. As per section 157, Amar shall be compensated by the Srijit for the act committed by his employee. Absolutely correct. Compensated, how? Difference in price is the compensation. We'll further discuss this topic. Have a great day. Wish you all the very best. Bye. Sir, class over, sir. Ram?